Good morning, everybody. Good morning, good morning. We're still a couple minutes before the hour, but here I am. We'll give it a couple minutes, see who else shows up before we get going, guys. Hope everyone's doing well today. Looks like you guys have been busy. Ron, good heads up on the news in 2 minutes. 8:15 was an awkward time, right? Doesn't usually happen then, so. Good stuff. Good morning, Alex. So who did it this morning? You ready? Let's ask. Who went back and looked at yesterday's trades? Who woke up and said, you know what, just for grins, I'm going to try this. I'm going to go see what worked and what didn't work. You did it, Alex? I like it. Do you have a focus for today? What felt easy? Good morning, Safia. And I'm always curious because sometimes I go back. If I look at yesterday's trade, Ron, you can't hear me? Alex, you can hear me. Guys, give me a Y if you can hear me. That's what I thought. It's Ron being a troublemaker today again. How's everybody doing today? All right, we got it. You can hear it, Shogun, John in Alaska, Jason, good. Jeff, 3558, nice to see you in here. So guys, I go through my charts. I look at yesterday. I always do. I take pictures of what I do because every picture is an opportunity for bragging rights if it goes well, right? And that's why most of us take them. And then some of us don't take them because, oh my gosh, I broke my rules. I don't want photographic evidence of this. Guys, if you go through what you did yesterday and study a little bit, some of you fought trends yesterday. Hopefully you had a trade that says, hey, I fought the trend and I lost. Or some of you didn't let the price close back to the gap and the triggers and you get in a little early. If you study this every morning, guys, it's gonna accelerate the learning process. So make sure that you're taking the time to do that. Make sure that you are taking pictures, right? Taking as many pictures as you can take and post those trades in class, guys. And I say this every morning. I'm going to say it again at the beginning of class, guys. I need you to annotate your pictures. I need you to tell me why you did what you did. And I know that that's a huge pain in your ass, right? Becoming a successful day trader is going to take a little bit of work. But guys, I promise, I've been on the path. I've seen the path. I've trained hundreds of people. And I know what works, guys. And writing your rules on your chart, explaining why you got into a trade. It's not just for me, guys. I can look at your chart and figure out probably what you did. The challenge is new users aren't usually sure what they did. So go through your rules, write them on the chart, make sure that you're following them. Guys, hold yourself accountable to sticking to a plan that has been proven to win more than it loses, to sticking to a plan that gives you the best chance of success. Hold yourself accountable to following your rules. And if you willingly break your rules because of the advantages, annotate your chart. Tell me why you did what you did. Tell yourself why you did what you did, guys. This is part of the path. That's how you get to where you want to be. Taking those pictures, posting them in class, and then using that spreadsheet, guys, putting all the pictures of every trade that you take, getting them into the spreadsheet, and then not just leaving them there to get dusty, right? Going back the next morning, studying it, looking at it. What worked well for you yesterday? Guys, do you know what worked well for me yesterday? Momentum worked well for me yesterday. A clear path worked well for me yesterday. And an entry at an area in triggers. Guys, that worked well for me yesterday. Crazy thing. Momentum, a clear path, and entry at triggers. Guys, those were the trades that I won yesterday. You want to know which trade I lost? I'm going to tell you because I lost a trade. I made a mistake yesterday, guys. I fought the large chart. I fought the large chart and I made an opinion about what I thought was going to happen rather than waiting for all of my charts to agree, guys. I went against the trend and that was my loser yesterday. I take losers. Sometimes I take chances just like you do, but I understand why. And that's the important thing, guys. Understand the whys of why you do what you do. And you'll get that from your spreadsheet. You'll get that because you're going to take a look. What worked? What didn't work? What felt easy? What felt forced? And if you get in the habit of doing this every day, guys, you can focus on what feels easy, what keeps you relaxed. Day trading does not have to be stressful, but day trading requires you to be able to read your charts, right? And when you read your charts, you're going to understand when advantages are present, guys. Chart reading is 90% of what we do each and every day. Chart reading identifies the trend. Chart reading identifies momentum. Chart reading identifies where that momentum may subside, where that trend may reverse. Everything that we do revolves around chart reading, guys. 90% of your day is chart reading. 10% is taking trades based off the advantages. So we're going to talk about advantages this morning like we do every morning. We're going to talk about a high probability trend trade. We're going to talk about a trade that has been proven by you guys, not just me, to win more than it loses, right? To have the potential to win 75, 80% of the time. We're going to talk about a trade that provides three very simple advantages, three very identifiable advantages through only using three rules. We're not going to add to it. We're not going to add language to the rules. Look at how simple it can be, guys. Rule number one says that you have to have strong trigger lines on your large chart. Strong trigger lines, three words, providing the advantage of momentum, guys. The first part in the recipe for a trade. Rule number two says terminations are false. When rule number two is true, you have the advantage of a clear path. 2/3 of the recipe for a trade happen on a large chart. And then, guys, you're going to use a limit order at areas and favorable large triggers. And this is going to give you the advantage of an entry area. And your chart reading is going to identify where the market is likely to continue. And that's that advantage of an entry area. It's going to understand and show you where the market is likely to go. And you'll use momentum, you'll use Fibonacci for smart targets, and you'll also understand where the market is likely to stop, guys. And these are these termination conditions, determining whether or not you have a clear path to your profit targets. Guys, these three rules, simple. Don't change the verbiage. Don't change it from strong triggers to strong triggers if, strong triggers but. You know, don't change it from termination conditions false to termination conditions false, but if a fib is this color. Let it be simple, guys. Your large chart is going to identify direction. If the background is green, you're in an uptrend, you should only be looking for rules to be met for high probability trend trades long. If the large chart is red, the background is red, you should only be looking for rules to be met for high probability trend trade short. Guys, give yourself the advantage of trading with the trend, especially my new users as you learn to read your charts. This large chart acts as a broad stroke of a brush. It's showing the overall opinion of the market. Think of the market, think of the large chart. This is the big crowd, guys. This is 10,000 people packed in a room, and they all think the same thing. They agree on direction, they agree on momentum, they agree on the areas, right? And those first two rules have to happen with that large crowd opinion. You're going to determine momentum, and you're going to make sure that you have a clear path. Once you've established this and the rules are true, you're going to turn your attention to a smaller, faster chart, guys. And the smaller, faster chart is nothing more than a refinement tool. It is an entry chart. And you're going to be able to refine that broad stroke of a brush all the way down to that area where the market is likely to continue, and then use that area, pinpoint that area for entry. It's going to allow you to reduce your risk. It's going to allow you to maximize your profit potential. But what happens in only one bar on the 13.2, you're going to see happen in maybe 15 to 30 bars on the 5.1. I put a square around one bar, it transposed to my 5.1, and look at the difference in the market action compared to the two. We're going to use this refinement process to be able to get that best of the best entry where the market is likely to continue, and that's going to give you that third advantage, piecing together what a trade is for new users. So this is what we're going to focus on today, guys. We're going to keep it simple. Going to keep it focused. You guys are going to post trades in class. You're going to post your chart reading in class, and you are going to annotate those charts. Lots. Write too much. I'd rather you write too much than not enough, guys. Make sure that you know what you're looking at. Learn the rules for when it's okay to trade, guys. 3 rules that we're going to focus on today. If you are looking for trades outside of the high probability trend trade, if you're taking trades that don't fit the high probability trend trade rules, then definitely write your rules on the chart and let me know what you're looking for. You have to learn them so you know when it's okay to trade. And then it's your job to simulate every day. Guys, simulator's fun. It is all the excitement of day trading with none of the risk, no financial risk. Post those pictures in class until you're sure you have the correct rules. I only know if you have the correct rules if you post them, right? Don't practice the wrong trades, guys. It's fun to be a simulator millionaire, but it has very little effect on your success outside of simulator. Don't teach your body to do the wrong things. Don't teach your brain to look for the wrong stuff. And simplify. We're going to focus on one trade, guys. One trade for an entire hour this morning. We're going to talk about the looks, and you will commit to the looks. You're going to build trust through repetition. You're going to create confidence through the memory of success, and you're going to learn these looks so that they become easy. Your spreadsheet is going to help you create that easy understanding of what you're looking for. Let me pull up my spreadsheet real quick. One of the things I do, and you're going to hear me harp on pictures a lot, guys, is I take pictures every time the rules are met for a high probability trend trade. I steal your pictures every time you post a high probability trend trade, or most times. And guys, I give you credit for it. It's kind of fun to get your name in the spreadsheet, right? You're like, heck yeah, look at me. But guys, I have over 200 pictures of a rules-based entry. 200 pictures reminding me what the market should look like at the time of entry. My study, the time that I've spent taking these pictures, guys, makes it easy. I know exactly what I'm looking for, and if I see it, I'm obligated to pull the trigger, and if I don't see it, I'm obligated to sit on my hands. My world, and hopefully your world will too, has been reduced down to 2 possible scenarios when watching the market. And it's either rules met or it's rules not met. And if I let that be my guide, it's going to keep me out of a lot of trouble. After class the next day, before the next day, download your replay data for that current day that you just finished trading and go back and retrade the day, guys. Fix the mistakes that you made. If you got in early, if you stayed in too long, if you fought the trend, fix it. You can hit pause on market replay, and you can make sure that your rules are met before entering or trade. And the idea behind market replay isn't to inflate your ego because you're so rich on simulator money. It's to show you the potential. What you could have achieved in the market had you just stuck to the plan. Guys, market replay is a huge confidence builder. Take pictures of those trades when you follow the rules. Get them into your spreadsheet. Get them into my classroom. 15 hours every week. I'm providing you feedback. It's live. All you have to do is post a chart, and we'll talk about it. And repeat this process every day until you're always taking the correct trades. Guys, if you're always taking the correct trades, right? If you are embracing this recipe each and every time you pull the trigger, then you're taking a trade that has been proven to win more than it loses, right? To give you a statistical advantage in the market. And if you're always taking the correct trades, if they win more than they lose, you're guaranteeing yourself you can win, guys. And that's when you go to one of those prop firms. That's where you trade someone else's money. You test your plan up against their qualification process. You make sure that you have the ability to follow your rules, even in the heat of the battle, even when there's money on the line. And guys, it allows you to control up to $1 million for less than $500 a month. And if you stick to the plan, if you're winning more than you're losing, guys, you get to keep 90% of what you make with these prop firms, right? You get to keep the first $25,000. All you have to do is have a plan, right? Put something in place that wins more than it loses and stick to that plan. Let it be simple. Keep it easy. So that's what we're going to do today, guys. We're going to focus on what it is that we're looking for. We're going to focus on a high probability trend trade. A trade when all triggers agree, right? When every chart agrees with everything on a trade, to put you in a position to take the trade. And everything that I talk about comes from the education page. Everything that you need to be successful can be found right here. It can be found right in the Discord basics, guys. There are no secrets. Our goal is that you are successful, that you have the tools to back test this. And I invite you and encourage you, prove me wrong. Do the study. Go back and circle tails and look at entries and follow rules and tell me that I'm full of crap. Because if you put that work in and some people need that. They need it to come from a place of spite. Do the work to prove me wrong, guys. You'll be a Nexgen client for life. I know because I had doubts and I did the work. You know, you come into something for the first time, you're not good at it on day one, and you're like, there's no way that this can work. But then you do the study, you follow the path, you do the plan, you're like, oh shit, it does work. Pardon my French. I'm just not working it. So guys, before we do that, and I'm sorry, I went into the path, what we're looking for, but we have to check news every morning. Gotta check news. Ron gave us a reminder earlier that there was news coming up. It was at 8:15, right? We had high impact, might move the market. High impact might move the market, guys. Then we have a little bit of low impact. It could still move the market, but it's important that we're looking for these high impacts, for these medium impacts, because these are the ones that can make a market unpredictable, jumpy. It can overrun areas. It can just be too fast to trade. At 10 a.m., we're going to have manufacturing PMI. I don't know what that is, guys. I have no idea, but what I do know is that it may have a high impact on the market, so I'm not going to be in a trade when it happens. Same thing with the medium impact, the ISM manufacturing prices. Construction spending. Who's construction? I don't know, but I know that it may move the market. Guys, at 11 a.m., we have crude oil inventories. Normally, that's a Wednesday thing. If you're a crude trader, even though it says low impact, guys, this could be a high impact moment for you. Keeping your eyes open. Member Harker speaks at 1 p.m., guys. And that's all the news happening on this first day of June. Be aware, write a note, set an alarm on your phone. Make sure that you're not jumping into those freight trains of emotion, right? And then let's go to the education page, guys. Let's talk about the recipe. Good morning, John Novak. Always nice to see you in this classroom. We're going to head over to the education page, and we're going to focus on 3 rules, guys. Super simple. Remember, 3 rules. I'm going to give them to you right now. I share a lot of pictures in the room. I'm going to encourage you guys. If I put it in the room, it's worth keeping. Save that link. 3 rules. 2 charts, and guys, these 2 charts and 3 rules create 3 advantages. 3 advantages that create a trade, a high probability trend trade, a trade that's been proven to win more than it loses. And this should be your first, excuse me, your first 30 days. Your first 30 days with Nexgen as a brand new user should be focused on a high probability trend trade because it teaches you to read your charts. Understanding where the market is likely to go, where it's likely to stop, and where it's likely to continue. Your chart reading will take you to that next level that you're so eager to be at, but you have to build a solid foundation. Your highest probability trend trade, guys, is going to be that 5-1, that small chart trend trade that happens after a large chart termination condition. And that's what we're going to focus on a lot today, is identifying those termination conditions, identifying those entry rules. And everything starts, guys, on that large chart. And that large chart is going to be used for a high probability trade. Each indicator on every chart. You'll hear me say a lot, when all charts agree, guys, it becomes easy. When all charts are saying the exact same thing, the market's likely to do what those charts are telling you. We're going to learn how to read them this morning. And it's going to work you into a medium probability trade. I'm going to go ahead and share these definitions because as we get into termination conditions, I'm going to talk about this a little more. But medium probability trades are defined when most of your indicators line up for a trade. Guys, your chart reading is going to allow you to recognize which ones are lining up for the trade. However, a small issue exists. Your chart reading is going to identify that small issue. This will probably be the vast majority of your trades. It doesn't need to be, but as humans, we are a little impatient sometimes. When you're executing medium probability trades, you're going to have to take them and manage assertively. Your ability to read a chart is going to allow you to manage it assertively. And if there's trouble in your way, yep, your chart reading is going to identify that trouble. You may take a portion of your position off at that trouble spot. You'll be able to reduce your risk to a zero loss level. Medium probability trades are not high probability trades. Everything doesn't agree. Medium probability trades say that a small issue exists. A singular small issue exists. We're going to talk about not letting those issues compound, creating a lower and lower scenario. And we're going to start with the trigger lines. Guys, everything revolves around the trigger lines. You're going to see them for momentum. You're going to see them to help identify that clear path. You're also going to use them for your entry area, guys. Trigger lines are kind of the core study point. And the first way we use them is rule number one. Rule number one says that we must have strong trigger lines. Strong trigger lines defined right here in this picture. In an uptrend, when the background is green, your small triggers, these solid lines, should be crossed up and above the large triggers, these dashed lines. They're also crossed up. They're wide. They're angled in the direction of the trend. They're not flat and lifeless, right? They are zipping up like a shark about to breach. Guys, this is your strong trigger line. The space between the small and the large lets me know that the odds are favorable for the market to continue in the direction of the trend. That's your first advantage, the advantage of momentum. Creating a scenario where this uptrend is likely to continue just because of the pressure pushing it. In a downtrend, the small triggers are below the large triggers are wide, they're angled in the direction of the trend. The space between the small and the large, that gap between the two, lets me know that the odds are favorable for the market to continue down. Once again, guys, this is your first advantage. Odds favorable momentum. You're going to hear that in class all day long. If you let this be the basis for everything you do, guys, it creates a very strong advantage. With this much momentum, it's difficult for the market to stop and turn on you. It happens at times, but it's difficult. But when those small triggers work inside of the large triggers, guys, we call this a weakening of the large triggers. When you weaken a large trigger, anything can happen up or down. And I like the verbiage, right? One is odds favorable, one is anything can happen. You're going to see them annotated in the chart or in the room a lot. OFM for that odds favorable, right? The market continues to push. ACH, anything can happen, those weakened triggers. Notice that your anything can happen triggers are precursors to reversals in the market. Notice that that odds favorable momentum is right in the middle of a move, pushing that market in the direction of the trade, guys. That's your advantage. And do you see these tails, these wicks? Guys, these are potential pullbacks on your smaller, faster chart. When you have odds favorable momentum, this is when we look for our entries. We look for that best of the best on that smaller chart to get us into the market so that we can continue with the trend. And then notice how there's a bit of a transition phase here, guys. When the triggers don't agree, when they don't match the color of the background, the market's trying to figure out what it wants to do. We don't control the market. We wait for the advantages to be present. Guys, this is where new users are tempted to predict what the market will do rather than waiting for rule number one to be true. And it gets traders into the position without the advantage of momentum, which really it removes that first advantage, right? And then if you wait for things to sort themselves out, ultimately the market gives you that odds favorable momentum again. I encourage you guys, wait for that momentum. Get good at recognizing that momentum. I'm going to show you just how easy it is. Guys, this is crude oil. From that point where the smalls break away until they return, this is where we're looking for those high probability trend trade short, guys. If I see one of those tails, here's your study tool. How do you build trust? I'm going to circle this tail. That's it. I'm identifying odds favorable momentum. And I'm looking for one of those tails. And guys, crude hasn't produced a lot of them today. Not yet. There's another one right there. Odds favorable momentum, and there's a tail. Guys, if you want to know how many opportunities there were in the market, open up that 13.2. Look for those tails. It'll let you know how many opportunities there were in the market, following rules, how many times you had odds favorable momentum. The average user can identify odds favorable momentum in a matter of seconds, guys. You've already got one rule, and you're really good at it. Is everybody cool with that? Can you give me a yes in the room? Give me a Y. Give me something letting me know that you are comfortable. Why will that not let me copy? Pretty easy, right? It's an easy look. Get those advantages. Make sure that market's likely to continue in the direction of the trend. Guys, money, that's what it does. But once you have that momentum, we have to make sure that there's a clear path, that there's absolutely nothing in the way, guys. There's nothing worse than having all that momentum and bouncing right off a key Fibonacci area. Guys, these Fibonacci areas are areas where the market is reacted to, where the deep pockets, institutional traders, the people that move the market, they know where these levels are, just like you do, guys. This provides an advantage for you because you're looking at the same price ranges that they're looking at. You're looking at these same key areas. And these areas can be red Fibonacci resistance or blue Fibonacci support. It may be these yellow 1-to-1s. It can also be a divergence high line. When a pivot is formed and the momentum doesn't follow, it's a loss of momentum. This magenta will print from a high. Cyan will print from a low. And guys, when price gets to these areas, it may react. So these are your areas that can be considered for termination conditions. I'm going to click copy, and I'm going to give this to you in your room. And this is a great map if you're brand new, just what you're looking at on a chart. But these are potential termination conditions. And guys, when you have these termination conditions, it's a simple recipe. It becomes easy to recognize whether or not they may stop the market. And it takes two things. The first thing is price reaches the area, which means those dynamic Renko bars come down. In this case, they reach support. Price reaches support. Once price reaches an area, you ask yourself, where are my triggers? If all of your trigger lines remain above support, you've reached an area that may stop the market. Remember, that's part of your chart reading. You will be able to identify in the moment where the market is likely to stop and choose to not trade into that area. No more short trades into an area that has been reached and the trigger lines have not crossed. You're going to see it from highs in the market. We had a loss of momentum on a pivot. And guys, that magenta line printed off to the right, this is not a termination condition because price didn't reach this magenta line. Price created this magenta line. When price comes back to the line, the triggers remain below. Now it becomes a termination condition. Price reaches resistance. All of your trigger lines remain below. We have a termination condition. Price reaches 1-to-1s and resistance. All your trigger lines remain below. Guys, these are your visual for termination conditions from a high point in the market. Is the current 13.2 bar with momentum greenback? And this picture, Alex, are you asking about this picture? Crude? Larger down, smaller up, right? So let's double check. If I'm not sure, let's go back to the trigger lines. So Alex, that's your best look, right? That's your advantage. When both triggers are wide, angled in the direction of the trend, crossed up, smalls above the large, that's your odds favorable momentum, isn't it? So you can answer your own question, right? Do you have odds favorable momentum? Not at all. And look at this, Alex, one more. Price reached resistance, right? Did the trigger lines get above it? So isn't that our recipe instantly for a termination condition, what we just talked about? Price comes up and reaches resistance, even if it exceeds it, but all of my trigger lines remain below that area, which means that I've reached a termination condition, which means that I'm not taking trades long until I have the advantage of a clear path. Does that make sense, Alex? Cool. And then from lows, the recipe never changes, guys. Price reaches the area. If the triggers remain above for a low, it's a termination condition. Price reaches an area, termination condition because the trigger lines remain above. You see it 3 times here. Here's one of those pivot stop outs. One pivot creates that cyan line. When price reaches that cyan line and the triggers remain above, now it's a termination condition. Is everybody comfortable with this concept? Give me a Y in the room, please. Price reaches an area if the trigger lines break through or don't break through, it's a termination condition. So guys, there's going to be a way that you use these termination conditions, and let me clear this out a little bit. See if I can get back to the pictures I made yesterday. We're going to talk about strong tops and bottoms because your highest probability trend trade comes from a termination condition on the 13-2. So now that we've defined a termination condition, price reaches the area, no triggers through, that's a termination condition, textbook. I want you guys embrace this recipe for good tops or bottoms. If a termination condition creates a full reversal, guys, this is your picture, this is your reminder. If a termination condition creates a full reversal, you have what we call a strong top or a strong bottom. It's these strong tops and bottoms that set you up for the highest probability trend trades. In order for it to be a strong top or bottom, you must have price reach an area with absolutely no trigger lines breaking through. Guys, this is your precursor for the highest probability trend trade. If your small triggers break through the area and your large triggers do not, it is not a strong top or bottom. It's a 50-50 look. 50% of your triggers are through, 50% are not, guys. This is not considered a strong top or bottom. This lesson came about yesterday from a great conversation about making sure that you can identify a strong top or bottom. Once the triggers break, you take away that high or low's ability to be a strong top or bottom. And then finally on the tail end of this one, if your trigger lines breach an area, it is not a strong top or bottom, because when your trigger lines get to the other side of an area, you now actually have created a potentially clear path. We've talked about when an area is likely to hold. When price reaches the area and absolutely no triggers go through, guys, that's when you've reached a termination condition. That's when you no longer have a clear path. But when both the small and the large triggers get to the other side of a Fibonacci area, whether it's resistance, yellow 1-to-1s, a divergence line from a high or a low, when both small and large break through the area, we consider that area to be broken. The path is clear. And then the same side of that is if price is moving up here. Whoops, they just kicked me out of Discord, guys. I'm coming back right now. Nobody panic. We're going to be okay. Discord likes to let me know every now and then that Discord is in charge. All right, I should be back up and running. You got me? Price reaches an area, absolutely no, or all the trigger lines break through, right? Support begins to act as resistance. We now have a clear path looking for those rules to be met. When all the triggers get above resistance, it begins to act as support. The path is clear. We're looking for the rules to be met, guys. Let it be simple in the beginning. Either you have a clear path or you don't, right? Either price has reached an area, whoops, and all of the trigger lines remain below. Rule number 2 is not met. Because rule number 2 is not met, I don't have the advantage of a clear path. I'm going to sit on my hands and I'm going to wait for the path to be clear, because that's where my advantage come from. When the small and the large break through the area, resistance begins to behave as support. Smalls and large get above, and guys, there's one of those tails, one of those potential entries on the 5-1. This is your beginning, your first 20 days, the best of the best, guys. Looking for a clear path, coupling it with that momentum, that creates the advantages for a high probability trend trade. Your first medium probability trade, 90% of you are going to have trouble sitting on your hands and waiting. So you're going to have to feel like you need to be in the market. And you're going to look for trades that fall outside of the high probability trend trade, where a small issue exists. And your first one is going to be what we call a 50-50 trade, guys. And a 50-50 trade is not your chances of winning. 50-50 is nothing more than a reference to where the trigger lines are in relationship to the area. 50% of your trigger lines, the small triggers, will break through. 50% of your trigger lines, the large triggers, remain below. Hence the name 50-50. You could call it a straddle, right? You could call it a one above, a one below. But what it means is that the area isn't broken yet. 6980 is not broken. It has the potential to break because of odds favorable momentum. And this is such a key part of a 50-50 trade. You must have odds favorable momentum. But because it's not broken yet, it's not a clear path. Your small issue is forfeiting the advantage of a clear path. Don't forfeit momentum. Don't forfeit an entry area. Let this be your one small issue. And you see right here, guys, the small broke through and the large didn't. And ultimately that market reverses, right? The market comes up, odds favorable momentum. It has the potential to break. Let everything else be perfect. And then when the small and the large get above, guys, there's your highest probability trend trade. The 50-50 trade tends to work more when it comes from a strong top or bottom. The 50-50 tends to fail more often when it is not coming from a strong top or bottom, right? The 50-50 fails more often without odds favorable momentum. So you're going to develop a little bit of a plan as you work into these medium probability trades to make sure that you're identifying through chart reading the advantage of momentum, right? Making sure that you have a strong top or bottom, giving yourself the best chance of success. Once your large chart has established the direction, the momentum, and the clear path, you're going to turn your attention to your 5-1, to your smaller, faster chart. Or it may be any time frame, but big chart, small chart, right? Large chart defines, small chart is for the entry. Let's find those entry rules, guys. When everything is right, when the momentum is best, when the path is clear, this is what your smaller chart's going to look like. Your smaller chart is in this uptrend. Should have nothing but green bars. Your dynamic Renko bars are up, they're strong, they're all green. Nothing has given any indication of this market wanting to go down. Your large trigger lines should be up and strong, one on top of the other. We call this favorable large trigger lines, guys. When they're working together in harmony, one on top of the other, overlapping, this is going to give you the best look for entry, guys. This is going to be your smallest window of opportunity. It's going to create the tightest, most concise area where the market is likely to continue. Embrace this idea, because rule number 3 says that we're going to use a limit order to buy or sell an area inside of favorable large triggers. The smaller the area inside of favorable large triggers, the less wiggle room that there is. So we're going to look at the large triggers coming up strong, one on top of the other. We're going to identify the areas that may be falling within them. Trades come from lines, guys. The lines that you're going to trade from are going to be Fibonacci support, Fibonacci resistance. It's going to be a mid-band or yellow 1-to-1 dots. Guys, these are your options for entry. And you're going to create this window of opportunity where you can identify these areas inside of favorable large triggers. And that window of opportunity is going to identify where you need to place that limit order. But we don't create a window of opportunity until we get a reversal bar, because the reversal bar signals the beginning of a pullback. Remember, use a limit order to buy or sell a pullback. And a pullback is a small retracement in price that is counter to the underlying trend. See if I have that picture. Nope. It's a small retracement in price counter to the underlying trend. I'm going to find the picture that I like to show with that one, guys. That who's in control picture showed up on my other screen, sorry. Remember, the large chart is defining areas, it's defining direction, it's giving us momentum, it reflects what everybody's thinking. Your reversal bar, that little pushback, that small retracement that fights the large crowd, is from this small crowd that doesn't care about trend, that doesn't care about momentum. And Nexgen users were thankful for these yahoos because they're going to set us up to identify the window of opportunity. When that reversal bar happens, you're going to identify for a long trade your highest point of support to your lowest point of support that's falling inside of favorable large triggers. In a short trade looking to sell the market, you're going to identify your lowest point of resistance to your highest point of resistance inside of favorable large triggers. And your job is going to be to activate a limit order right at the top of that window. And be patient. Wait for the market. It either comes to you or it does not. And remember that this is a smaller, faster chart. It may fluctuate on the way. That's okay, because the 13.2 leads the way. The 13.2 has momentum. The 13.2 has a clear path. Guys, I'm activating a limit order right above this highest point of support, 79.21. And if the market decides to come back and fill my order, I'm in a long position. And I'm in a long position. Where's my picture? Where's my recipe? There we go. Guys, I'm in a long position because the equation is fulfilled, right? Because I have the advantage of momentum, because I have no termination conditions. I have the advantage of a clear path, and I've identified the entry area, that point where the market is likely to continue, and I've entered the market at that point. This is my high probability trend trade, guys. My protective stop, my initial stop, my stop loss, my risk, whatever you want to call it, is going to go outside of the window of opportunity. It's going to go where the market should not, because if the market goes below this window, I no longer want to be in the trade, guys, and I'm okay with it going beyond that window every now and then, because anything that wins 70 to 80% of the time. Do we have any math whizzes in here? How often is it going to lose? Just mathematically, it has to, right? 20 to 30% of the time, it's going to hit your stop. You have to be okay with it. You have to trust that it wins more than it loses. Guys, that trust gets built through study, through repetition, through going back and circling those tails. That trust gets built through practicing this over and over, through putting it in the room, through having that conversation daily, reminding you what you're looking for and what you're not looking for. And guys, this is a trade that without hesitation, I'll take 1,000 out of 1,000 times, because 70 to 80% of the time, this is my result. 70 to 80% of the time, I'm experiencing a level of success, right? That dopamine kick, I feel good about it. Because we wait for the pullback to the area inside of favorable large triggers, once it starts to move in the direction of the trade, guys, I can reduce my risk. And by reducing risk, what you're going to find is that even when it ultimately doesn't go in the direction of the trade, your losers are going to be considerably smaller than your winners typically. Because you wait for the pullback to the area inside of favorable large triggers, the distance from entry to exit grows, meaning you have more profit potential. Guys, This is your best of the best look. And to build trust, to study, to feel good about it, you're going to want to go through, and every time you see odds favorable momentum, every time you see a clear path, circle that tail. And if you circle that tail, let's see what it looks like at 9:02 a.m. today. It didn't make it, right? It didn't hit that area of resistance inside of favorable large triggers. Guys, that's not your trade. And if we pull back and we'll look for the next one, and crude oil's been pretty shaky today, right? Crude oil inventory day. The next one that fits the rules, odds favorable clear path, happened all the way back at 4 a.m., guys. I don't know if you were up at 4 a.m. Eastern. I wasn't. But look at this. Even in the middle of the night when people are sleepy, odds favorable momentum and a clear path. And guys, there's your pullback directly to resistance right inside of those large triggers. That's your trade. Circle those tails, compare them to the 5-1 entry. And guys, write your rules on the chart. Write them big. Keep it simple. Did I have odds favorable momentum? Yes. Did I have a clear path? Repeat the advantages. Yes. Area inside of favorable large triggers? Yes. This is a trade that typically wins 70 to 80%, right? This is a trade that I'm going to take every time it sets up. I have a clear path. I have an advantage. Guys, take this picture. Whether you are in TechSmith or whether you're using Snagit, share it to Screencast. Get it into that cloud. Once you get it into that cloud, guys, you're going to steal that link that it provides you. And if it's a rules med entry, you're going to come to your spreadsheet and you're going to pop it into your spreadsheet, right? You're going to say, this one fit the rules. This was perfect. These were all the advantages coming together. And you're going to call it perfect trend trade short so that you can go back and study it every day. And I am up to 212 pictures now. 212 pictures of a rules-based entry. If you took it as a trade, come to the front page, right? Paste that link in there. What kind of trade was it? Well, it was a trend trade. I took it on the first day of June. How did I feel going into that trade, guys? This is going to reflect how much you trust your rules. I might have been nervous because I wasn't sure about the clear path, or maybe I wasn't 100% on that odds favorable momentum. That's why we posted in the class, to get those questions answered, to get those fears taken care of. I do know that it was a trend trade, right? I know that my top or bottom was strong because my highest advantage trade comes from a strong top or bottom. It happens with odds favorable momentum. Even my 5-1 triggers were strong. Whoops. And on this particular trade, I won my first contract. I won my second contract. And I'm going to put a little note. I'm going to call it perfect. Never miss this look. And then when I study this tomorrow, I'm going to go, oh my gosh, look at this winner with the perfect look that I should never miss. I need to study this picture. What's it look like? And it's not going to let me do it. That's okay. We're having a day today. What's it look like? It looks like momentum. It looks like odds favorable. It looks like a clear path, right? It looks like an entry inside of favorable large triggers. And guys, this is it. This is the one that I'm looking for each and every day. You have to study. You have to circle tails, right? Here's one of those 50-50s. Let's circle the tail on the 50-50. See what it looked like. The first one is no divergence, strong triggers, right to support inside of favorable large triggers. And this market goes up about $120 worth before we begin to lose momentum. And then once that momentum gets lost, it pushes lower. right back to those large triggers. So guys, this probably would be a trade that you had to manage out of. If you got in at the 1-to-1s, the reversal bar prints, your risk is minimal. You've identified your trouble spot, the area that hasn't broken. You probably took quick profits, got to break even, and took a small winner or maybe a small loser on a medium probability trade, guys. You need to go back and study these each and every day. Odds favorable momentum, easy to recognize in the moment, right? Everything says down. The small triggers are down, the large triggers are down. The triggers are strong. The large triggers are favorable. It's a 50-50 trade. The smalls are through, but the large are not. This is not a high probability scenario because this area may reverse the market, right? It's a 50-50. It hasn't broken. How do I take a 50-50, guys? My money as a brand new user is worth the perfect entry. I've already forfeited the advantage of a clear path. I'm not going to forfeit anything else. It means that my entry on the 5-1 should be divergence free. It means that I should have strong triggers, small outside of the large. It means that there should be a tiny window of opportunity so that I can reduce my risk dramatically on an area that hasn't broken yet. I'm going to share this with you because as you go into these 50-50s, guys, this is going to be your largest source of trades that don't work. 50-50 trade, my entry better be perfect. No divergence, tiny window of opportunity, strong triggers. Guys, this is the easiest way to be successful in these medium probability trades. You're going to add another level of strength when it comes from a good top or bottom. When it comes from that termination condition that creates a full reversal. But it's okay to insist. Divergence prints on a 50-50. I don't have the advantage of a good top. I don't know what's going to happen, but what I know is that I've given away the advantage of a clear path, and now I'm beginning to lose momentum, and I don't have the advantage of a strong top. I'm okay sitting on my hands and doing nothing, guys. Eventually, you're going to be okay sitting on your hands and doing nothing. This is the S&P. There's a bad top, right? Triggers break through, and it pulls all the way back to support, guys. And when it reaches support, I want you to see this phenomenon. Price accelerates away from those large triggers, fast and furious, guys. And when this happens, and the large triggers remain a full bar away, there's room for a full reversal bar to get back to them. Price very often closes that gap back to the large triggers. You're going to see it all day, every day. Notice that the large and the small don't agree. No short trades even with a red background. Then it comes up, we lose momentum. We get a 50-50 on a pivot stop out from a bad top, guys. You can see that that 50-50 would not have worked. And then we get a pullback to resistance. Triggers don't flinch. And that market starts to move down with reckless abandon all the way to that key Fibonacci area that creates a bounce that would probably be untradeable. And now it continues through and ultimately gives us that clear path. Guys, if you go back and study your 13.2, you're going to begin to recognize just how often Fibonacci resistance holds almost to the tick. How often Fibonacci support holds almost to the tick. Guys, you'll see retracements back to areas that are broken almost to the tick. There are large corporation people that are identifying these areas, guys, and today was a weird day. A lot of overrun, right? In the wee hours in the early morning. And look how Fibonacci holds to the tick, guys. Identifying a potentially range-bound market because rules 1 and 2 are never met. It helps keep you safe. Advantages are designed to keep you out of trouble. And guys, that's your high probability trend trade. That's our focus for the first hour. That's the one that gives you the best chance of success. That's the one that you need to study. The easiest way to study is to go back and circle those tails, guys. Go back and circle the tails when the rules are met on the 13.2 on your large chart. And if that circle, or square in this case, lines up with an area of support inside of favorable large triggers, guys, this is your trade. Save it, steal it, put it in your workspace or in your spreadsheet. We are not trading tails, right? Just because there's a tail doesn't mean there was a trade. When the rules are met, and after the fact you circle the tail, guys, we trade pullbacks to areas inside of favorable large triggers. That should be in your plan as a new user. This is just the study tool of how to recognize them. There's one of those 50-50 trades. Price didn't reach the area. We have odds favorable momentum. What did it look like? Looked like a pullback directly to support inside of favorable large triggers, guys. The pattern repeats itself over and over and over. And I'm looking for that next one. This one goes all the way back to yesterday. But you can go back and study. You can study yesterday. You can study 2 days ago, 5 days ago. Just building that repetition, right? Look at that. Right to support inside of favorable large triggers, guys. I can't make this stuff up. It happens every day. These patterns happen on every market. These patterns happen on every chart. The only thing that you have to do is focus on the best of the best so that you can learn to read your charts, guys. I'm going to give you this right here. This is a trend trade checklist. This is making sure that the conditions are met before you enter a trade. Either the rules are met or they're not. There's that good top and bottom, and guys, there's a link to a video helping you identify them if you need help. Making sure you have momentum, no termination conditions, and areas for entry, guys. If you print this out and put it on your desktop and stick to it for every trade for 20 days, you're going to create a foundation that's capable of winning while you expand your knowledge. Because some of us are visual, I took that exact same checklist and I stole pictures from the resource material showing you exactly what it should look like when these rules are met. So Alex asked earlier, hey Mark, the large are down but the small are up. Do I have odds favorable momentum? Guys, here's your one-stop check. Does that look in the market currently look like what the manual says momentum is? Keep that one up, print this one out, right? And then here's a simple trading plan, guys. If you're brand new, let this be your plan for 20 trading days, for your first 30 days with Nexgen. You're not going to be a proficient day trader inside of 10 days on your demo, but what you are going to be able to do is study it. You're going to be able to back test it. You're going to recognize that we're available for you 15 hours live every week to give you feedback on what you're doing. And this is just designed to keep you focused on the best of the best, guys. It talks about what you're looking to get in. It talks about stop logic, right? Every trade needs a stop. Every trade has targets. The better you become at reading your charts, the easier management becomes. That's the second part of the equation. The first part is getting those great entries. If you ultimately decide to add a chart, to go outside of that 2-chart scenario and add a range chart, it reminds you which chart you're going to be looking for. It's going to be your job to study and ask questions if you add that chart, right? Profit targets, trade management, strong trending markets, 50-50 trades, daily goals, and max risk, guys. All of this is put together by Nexgen to keep you focused on simplicity, to keep you focused on the best of the best, to give you a path as you learn the software, as you learn to read your charts. Guys, the smalls and the large broke through, right? But what do we notice about the triggers? Do we have odds favorable momentum on the 13.2? Guys, give me a Y or an N. Do we have that best trigger look? No, absolutely not. So what advantage would we be forfeiting? No momentum, right? So if I have anything can happen triggers, and guys, look at my 5-1. I've got weak triggers here. I have one of those losses in momentum. And what's the market do when the momentum goes away? And how often do you see this? Look at it push up. There's not enough momentum to push it down. So what does it do? It pushes up. It doesn't mean that there's a long trade. Everything still says down. But because of that loss of momentum, I don't know if it's going to be a fib or a mid band. I don't know if it's going to pull all the way up to these 1-to-1s, or maybe they want to get back to the mid band. I can't predict. But what I do know is that without the advantage of momentum, I'm uncomfortable entering a trade. Therefore, I sit on my hands. If I sat on my hands, look how the market pushed beyond my window of opportunity. Guys, rules are designed to keep you safe. No rules talk about the colors of the fibs, do they? Right? We talk about momentum and a clear path. Guys, look at this push. The market comes directly back to a termination condition. It looks perfect on the 5-1. Fibonacci creates a reaction in the market. If you tried to take this trade, you probably got stopped out because you traded directly into a termination condition. I encourage new users to scroll back and see how many times the market stops dead in its tracks on these key areas. This is how you build trust, guys. This is how you tell yourself, it's okay if the market continues through. I'm not willing to give up the advantage of a clear path. Everything is about trust, and trust comes through repetition, guys, and repetition is the key. Pictures are the key. That's our first hour. There is news in 1 minute, if I'm not mistaken. High impact news in 1 minute, guys. I'm going to leave you. Let's watch the S&P. Let's see if the news affects it. I'm going to be back in about 5 minutes. When I come back, we're going to start looking at the charts that you guys posted. Guys, the lecture portion of this classroom is done. From this point forward, it becomes a conversation. Everything that I talk about is going to be what you ask me to talk about, what you show me a picture of. We're going to watch the live market. We're going to see if rules are met, if rules aren't met. We're going to talk about termination conditions. We're going to talk about odds favorable momentum. We're going to talk about advantages. Guys, I want you to lead the way. You're in this classroom because you told Nexgen you want to become a day trader. You want to make money, right? You want to be consistent and successful. Be active in your own education. Start scribbling on a chart right now. Tell me what you want to talk about. Just for the lesson, guys, are we coming from a good top or bottom? Are we coming from a good bottom? Before I leave, is this a termination condition that creates a full reversal? What do you think, Safia? Debbie? Gary? You say it is a good top, a good bottom. Great. So when we come back, we're going to have a lesson again on good tops or bottoms. Is this it's not a termination condition? Oh, no, yeah, that's okay. Not a termination condition because price didn't reach an area, right? Price creates the area with the divergence low, but it didn't reach it. Therefore, it's not a termination. Therefore, it's not a strong bottom. Sometimes I throw these tricky questions in there, guys, to see what direction we need to go. I'll be back in about 5 minutes. When I get back, we'll get into that second hour. We'll have a little fun, ask a couple questions. Guys, if you are brand new in my classroom, do me a favor, say hello. Give me a little wave, right? Tell me that you're brand new. Tell me that you're in here for the first time. It's like drinking from a water hose, or from a fire hose, sorry. Your first couple days. It's okay to be a little confused, to feel a little lost. It will. Safia, it'll all click. Just takes repetition, right? Week 2 active. I like it. Back in a few minutes, guys. When I get back, we're going to start having that conversation rather than the lecture. Second hour, guys. This is the part where I'm going to scroll up in the chat, and I'm going to go and I'm going to look at your pictures, and we're going to talk about them. Guys, if I ever miss a picture, if I miss a question that you asked, please do me a favor, repost it, raise your hand, let me know. Everything that you do is important to me. I don't ever want to miss it. I'm never going to miss it on purpose. So Gary, let's see what you had. You had a 50-50 that didn't work, right? So it's not a strong top. You do ultimately have odds favorable momentum, but you're trading directly into one-to-ones, which means that you are trading into a termination condition. You put no, but price reaches the one-to-ones, trigger lines don't break through. This is a termination condition. You have divergence, which is okay, and you have split triggers. No areas actually fall inside of those triggers. Guys, this happens sometimes. You're going to take trades that fall outside, right? Don't have a good top or bottom, great job. You do have a termination condition, may have fudged it a little bit. You do have odds favorable. Area for entry inside of favorable large triggers. Oddly enough, these split triggers have no areas inside of them at all, guys. That should be a no as well. And then 50-50 trades. I mean, it's into a termination. It's not even a 50-50. But if the smalls had broken through, it would be a 50-50, which means that you would need a market flow signal, which you did get, but not from an area inside of favorable large triggers. On the ES, all four triggers went through, went below the fib. It broke, right? It had the potential to break, but it didn't. And then when it rolls and comes back below, absolutely. It doesn't make it strong. It means that the area broke and it unbroke, right? All four triggers get above, the area is broken, all four triggers are below. It becomes resistance again. You can't make a weak top strong by changing direction. Guys, stick to that recipe. I say recipe a lot because it really is. That's what we're doing. Let's open up Microsoft Word real quick. And let's put a huge font. A strong top or bottom is a termination condition that creates a full reversal. A termination condition is when price reaches an area and the triggers do not break that area. That is as simple as I can make it. So, Gary, while it does give you a clear path from the top, right, while it does give you odds favorable momentum, it's not a strong top or bottom because it's not a termination condition that creates a full reversal. It's just a full reversal, which is awesome because it puts you in a position to take advantage of every chart agreeing, right? So don't make it what it isn't. And this is really, Gary, this is one of those trades where you're just getting a little bit outside. You had a lot of advantages in that. That's okay. I like the advantages. Large comeback below, odds favorable momentum. That one-to-one makes me a little bit nervous because it is technically a termination condition. Your 5-1 entry is fuzzy at best. But you do have every chart agreeing. And guys, this is a great lesson. When all charts agree, oh, and David, that was you asking, not Gary. So it doesn't make it strong. Did that answer it? All charts agree, it makes it easier, right? That's a great precursor for every trade. When all charts agree, it becomes easier. When you have momentum, it becomes even easier. When you have a clear path, it becomes even easier. And David B., were you asking about this picture, or were you asking about what's happening in the ES right now? ES right now looks like it's trying to set up. Okay, that current chart. Does that make sense though, guys? That's a 50-50 that doesn't work, right? Which means that the area with the potential to break ultimately didn't. And the area is these one-to-ones. And then the large triggers stay below, the smalls get below, then the smalls get below, the smalls get below. All the triggers are on the right side for a short trade. All the triggers are pointing the right direction for a short trade. All the momentum in the direction is in the direction for a right trade. When all of your charts agree, guys, life gets easier. Gary, great picture. And just a little truth in advertising, right? Make sure that if a rule isn't met, don't try to convince yourself that it is. It's okay to still take the trade if all the advantages are present, but try to be truthful, right? Jeff, you posted a picture here. I like it. Once again, guys, I'll beg you if I need to. Let me know if that's the case. Annotate your charts. Tell me why you're doing what you're doing, especially if you're brand new. Triggers don't agree here. I'm not sure if you were looking for a long or a short, right? Everything says down. You circled a couple divergences. Maybe you're recognizing a slowdown on a 50-50. And then it starts to turn a little bit and it starts to go up, but it's right into resistance, right into resistance. A little premature here. And this one just didn't give you the perfect entry. It's a great chart. I think there's a lot of great information on it. It becomes easier if you tell me what you're looking at. And then Gary, not the gap theory here. This is a clear path in a trending market and a pullback to areas. And you get the signal right there above the large triggers at the mid-band at resistance. It lines up with the areas here as well, which is a bonus. But not a gap theory. Gary, are you with me? Are you in front of the room? Maybe you're trading. So guys, what's the gap theory? Let's talk about it real quick. The gap theory basically says if price pulls away from the synthetic triggers too fast and too far into a Fibonacci area, then it's going to snap back to the triggers. You're typically going to see this look. Price reaches Fibonacci resistance. The large triggers remain below that reversal bar marker, a full bar away. Price is likely to close that gap back to the large triggers. You see it again here, the exact same look, guys. This is why even from a good bottom, we still respect the termination conditions above us. Same thing here. Large triggers remain well above the reversal bar marker. And all it's saying is no shorts. It's not saying a long or a short. Gary, what you had going on is really just, it's a clear path and everything says down, right? And at this point, you're giving away the advantage of momentum. Smalls inside the large, divergent sprints. Even your 13 range chart is pushing the other direction, right? So what happens is with these losses of momentum, the market tends to push a little higher. We saw that same example earlier. So it becomes a little more difficult. Is it going to go from this fib or this fib or this fib or this mid-band or these one-to-ones, right? So Gary waited for a market flow signal, but it's going against everything. So not a high probability trend trade, but it's a heads up trade, right, Gary? Because everything says down, all your triggers are below, and that 14,344 area is likely to stop the market based on trigger line location. You can line it up over here on this chart and then wait for your signal here. I think it's great execution on what's not a high probability trend trade, but it's an amazing chart read, letting the large chart lead the way. Nice job, Gary. Didn't follow rules, just jumped in. And it made you pay for it, right? That happens a lot. I like that you posted that, though. Guys, it's good to remind yourself every now and then when you're not following the rules. Gary, strong triggers up, strong triggers up, strong triggers up, strong triggers up. Everything says up. There is no gap theory. Everything says up with momentum. And you took a short. Why is there no gap theory, Gary? Because these large triggers are strong as hell. Guys, this is one of the problems with replay. Is sometimes your brain says, oh, I remember this. This held. Get in. You'll look awesome. Right? Guys, it fights the trend. It fights direction. It fights momentum. It fights everything on God's green earth. And you're hoping that that red line holds. That's one that loses a lot more than it wins. And guys, that's one of the things on market replay. Don't take the wrong trades, because what your brain thinks now is that when you fight everything, good things happen, right? And the thing that you don't recognize is, Gary, you had a reversal bar here as well, somewhere over this direction. And you had a reversal bar here down at this other area. You don't know which one may hold, right? You've given away every advantage that you could possibly have. 50-50, divergence prints. You're in at the area rather than waiting for market flow. You did get market flow, though, ultimately. Add some warm fuzzies to it. Market comes up into this HVA line and ultimately doesn't work. Guys, 50-50 trades with divergence work less than 50-50 trades without divergence. True story. Great pictures, Gary. Great job going through, doing that market replay, increasing your awareness. Guys, if we talk about one of your charts, and I say something that maybe doesn't line up with what you had, go back and re-annotate your chart. This was a setup for continuation, but a bad top. It didn't work out. Safia, that was your continuation trade here. This was just a trend trade. That's a 13-2. Smalls breaking above. Not the best. Didn't work. Everything comes down. You're at a 50-50. Smalls are through. Divergence low. Support hasn't broken yet. And you've already had two divergences. You get in. Quick profits, third divergence. No reason to hold so long, right? So, Safia, let's talk about 50-50s, guys. What's a 50-50 mean? It means that the area is not broken, right? And I'm using yours, Safia, because this is a great example. So we have a bad top, right? It's not a termination that creates a full reversal. Therefore, the 50-50 is less likely to work. The areas that aren't broken yet is this cluster of fibs and also a divergence low. So we have two areas that we're hoping to break, and it's a very, very strong, that's a big area. That's a lot going on. You do have odds favorable momentum, which increases the possibility of them breaking. I do like that very much. But if I'm taking a 50-50 from a bad top with multiple areas that I'm hoping breaks, over here, there's your first slowdown. There's your second slowdown, but it's still odds favorable, right? And even when you get in at the best area, and I love your entry, Safia, picture perfect entry creates manageable trades. That third divergence lets you know that the party's probably over. There's no reason to sit and hope that long. Does that make sense? Because you guys may remember from other lessons, divergence is a loss of momentum, right? Divergence says that momentum isn't following price, guys, and this is your only small chart termination condition. 3 divergences in the same price range may terminate the trend. Becomes even more powerful when the small triggers are inside of the large, and that's exactly what Safia got to see here. So guys, this becomes a management opportunity on a medium probability trade. Beautiful entries. Your practice for the first 20 days creates manageable trades, and look at that. She's able to take profits almost instantly. Could have been break even, and turns this medium probability scenario into a little bit of money in the bank. Nice job, Safia. Great chart. Lots of good lessons on there. Let's see. Who's next? Bum, bum, bum. Scrolling through, guys. Elvis jumped in the class today, and he says, I followed my plan. I made my money. I'm out for the day. I don't understand any of this, guys. I don't understand. But that's okay. It's not my plan. This is why writing your rules on a chart, guys, showing the whole picture is so important. Because first glance, this looks ridiculous. I have absolutely no idea why he did what he did. But I know Elvis, and I know Elvis has a plan, and he's trading a plan. So it's not really for me to judge his plan. But if you want to have feedback, guys, let me know what you're doing. Unless you're like Miss Debbie here, and it's so clear. Everything says down, odds favorable. There's your pullback. There's your entry. Could have added on, right? And then there's your exit. Beautiful trade, Debbie. Notice that every chart's telling you the same thing, right? Everything says down. Everything says we're going that direction. Every trigger's pointed that way. And the entry's there at the well, there's no area that you did. You made your 6. Nice job, Debbie. All charts agree. Gosh, that should be on a coffee mug. Have you guys ever noticed that when everything agrees, it gets easier? When everything agrees, even if it's one of the ones that don't win, you don't feel so bad about it? Because you're like, my goodness, I had every advantage. I have to take this trade. I'm obligated to take this trade. Directly into a termination condition. So you do have odds favorable. Safia, you may not have been completely truthful about your termination conditions. Because I could teach a class on termination conditions with this look, right? So we gave away the advantage of a clear path. You're also losing momentum, right? This one worked out. So, guys, I'm always thankful when you get away with one. I really am. Whoops, did I just close that? I may have just closed out my 13 too. I sure did. Guys, if you ever accidentally close out a chart, close your workspace. And when it asks you to save it, say no. And then just reopen that workspace. That was the ES, right? Yeah. So when you reopen the workspace, up comes. Your mind is losing it. No, it's not. Guys, one of the things that happens. So we start with a basic foundation, right? We start with the absolute basics, the best of the best. We start with all the advantages, right? Because in the beginning, that's really all you can process is okay, I see this, this is the rules, this is my checklist, stick with it. I know that it works. And then you begin to learn to read your charts. You begin to recognize advantages. You begin to recognize patterns. You begin to recognize all these different things. that you have seen win. And maybe you don't see them win consistently, but you see them win, right? And you're like, oh, I don't want to miss this trade because what if this is the time that the market breaks that area? What if this is the time that everything does what the market doesn't typically do? I need that to finish coming up. So when you do that, right, when you go through and you know you broke a rule, you traded into a termination condition and you got away with it. And guys, you guys love to show me when you get away with it. Safia, I'm not suggesting that this is what you've just done. You guys love to show me winners, guys. People hate to show me losers. People hate to show me that they might be new. They hate to show me that they may have made a mistake, right? But if it wins, they'll share it because it feels good. But it's not a path to long-term success. You show me about 90%. Are the 10% losers? You show me most of what you do. Why not show me 100%? The only ones that I don't want to see are the ones that followed every rule and you won easily, right? Because you know why you won easily. But I want to go look. But guys, this is a drill. This is a drill that I like to show people that trade in termination conditions, right? Stopped it in its tracks, created a huge bounce, stopped it in its tracks, stopped it in its tracks, hit the brakes, hit the brakes, hit the brakes. Guys, if you just go back a little bit, you begin to realize that termination conditions stop the market, right? There's a reason that your rules say don't trade into them. But every now and then you get away with one, right? And it makes you want to keep getting away with it. So it's up to you whether or not you trade into termination conditions. That's not my choice to tell you what to do. My choice is to identify advantages, to help you be consistent, to give you the best chance of success every time you take a trade. And then it's up to you to decide when you're going to break those rules, right? When you're going to fudge just a little bit because you're able to stack those other advantages. Gary, where's your entry? There it is. Odds favorable, everything says up, no divergence, pull back to the mid-band. I love everything about this one, Gary. That's an effortless, everything agrees, nothing in the way trade, and you got the same result. 50-50 look, good bottom, no trade. Why no trade? I'd rather see you take this one than this one. This one hit the Fibonacci support to the tick. That's a beautiful bottom. That sounds funny. That's a perfect bottom. That's Fibonacci support. Absolutely no trigger lines broke through. It created a full reversal with odds favorable momentum. That's like the best looking bottom ever in the world. I could teach a class on good bottoms with that one. You want to see what the challenge is, Safia? What are you using this chart for? Look at that. 2 charts. Simple. Did the 21.3 convince you to trade into support? Right? Did the 21.3 talk you out of taking that one? What's it doing for you? And you don't have to answer. Don't feel like you have to answer. Guys, if you have charts up on your screen that aren't helping you recognize advantages, why are you using them? Right? It might have helped me take this trade because it was odds favorable momentum coming from a termination condition, probably going to create a bounce. I could justify this with that, right? But this is a 50-50, and that's a perfect termination, and this is multiple divergences. I would never miss this trade. Isn't that the same concept, 50-50? And if you look right, it's divergence and weak triggers. 50-50 is likely to not work. So guys, if you're adding charts, make sure that you know how to use them. Otherwise, it's just noise that's going to create conflicting ideas in your head. Jose, and guys, this is where you're going to make a judgment call. One tick off of the area. Guys, for Fibonacci, one tick off is good enough for me. And your idea may be different, guys. One tick off of Fibonacci resistance is close enough for me, just because of the way these fibs come together. They are areas. If it is a precise measurement, like a divergence high, or it is a precise measurement, like a yellow 1-to-1, I want price to reach it. But Jose, on these, one tick, and then divergence as well, I'm probably not looking for that one at the area. And I'm looking to see if there was anything else. I do too, Ron. Ron says he noticed if he's looking at too many things at once, he ends up not really seeing anything. Ron, if I'm looking at too many things at once, what I do is I pick the one that gets me in a trade because I like to be busy. So Jose, and guys, this is going to be my example again. And Jose, I'm definitely not trying to beat you up here. Let's look at it. The 13.2 says strong triggers without a doubt, right? And it's one tick off of that resistance. So I have to make a judgment call. Well, Jose, your 13 range has large triggers on the wrong side, the small triggers on the wrong side of the large triggers, right? That's a disadvantage. Your 21.3 is a perfect pivot stop out without momentum, and the triggers are miles below it. That's a respectable termination condition. Your 5.1 is losing momentum from one tick off. And do you see how that works? If all you did was looked at that 21.3, there's nothing about this chart that suggests you have really much chance of success, right? Does that make sense? To everybody, if you're going to have these other charts, use them. Otherwise, you're going to get super stoked about support inside of favorable large triggers, aren't you? And where's your highest point? The 1-to-1s. 7 ticks above, but 1 ticks off. Guys, and I say that about your Fibonacci areas. And let me find the picture. I want to share this because for me, this was kind of cool. When your software opens up, it measures every turn in the market, every pivot, every up, every down, every swing, and it does it 10 days back historically, and it creates synthetic time frames, and it measures them on those, and it projects backwards and forwards and retracements and alternates. And when it's done doing all of those calculations, guys, this is what your chart looks like with Fibonacci support and resistance. It's crazy. So then your software goes through and it runs this algorithm, this freaking genius that John Novak created, and it starts gauging which are the most important, which have the highest concentration, which ones show up in the same areas. So every red and blue line that you get on a chart comes from thousands of calculations, guys. So if it's one tick off, it's okay. Like, respect it, especially if things aren't perfect. But if you have something that is as exact as a divergence high, this is the exact price in the moment that market changed direction from a pivot. That 68.36 line is exact, it's precise, and they got one tick above it before it started head back down, and there was no momentum behind that movement. There's times to bend rules, right? There's always times to bend rules, but understanding a little bit how these come to be helps out. Guys, look at this, directly into support. Trigger lines didn't go through, divergence prints, and there it goes, up beyond the window of opportunity. Just because it's a good top doesn't mean that fib's going to break. It just it gives you a little extra giddy up coming into it. Lots of good rules, or lots of good trades today, guys. Lots of great examples, good knowledge. You guys are being super quiet. David B, let's see what you have. 21.3. This is the same one as Jose's. So David, did you gather the lesson in this one as well? How the fibs are created has a lot to do with it coming one tick off. And my willingness to take a trade one tick off of a fib goes down dramatically because of the process of creating these areas. But when it's exact, when that 21.3 chart has a pivot stop out, the triggers are miles below and it's weak, that just kind of helps me not want to take this trade. They're within a couple cents, right? You know, when John was creating the algorithm, he had a friend working the pits in Chicago, and that friend's job was to know where the big traders were going to react. And we'll just leave it that simple, where they were going to react. And when John was creating his algorithm, he'd call this guy every day and he'd say, here's my numbers, how did I do? And the guy couldn't tell him what corporations, all that sort of stuff. But what he did tell John is that John was typically within 50 cents, right? We hit Fibonacci support. It went over at 3 ticks. But he's within 50 cents, guys. Sometimes they overrun, but a loss of momentum may keep you safe, right? But look at that to the tick. To the tick, maybe 1 tick above. Guys, these are areas. And that's why we use the words areas and say you're trading into Fibonacci cast in concrete, stone, absolute price. It's an area. Respect it. See how these trigger lines never got through? It looked like they were getting through, right? But they never did. Guys, there's no reason to take a loser there. I know some of you took this trade. Some of you love, because of a good top and odds favorable momentum, to take a trade into an area that may stop the market. It didn't work this time, did it? But nobody posted a picture of that. Maybe somebody took it. But I think where I was going with that, David B., if you're going to have the chart, right, use it. Guys, who would take a long into that look? Who would take a long into a pivot stop out with weak triggers that are 15 ticks below that trouble spot? Is that the look where anybody feels good about it? I don't. This is me personally. I don't care for it. Because that is an exact price where the sellers took over, where the buyers lost momentum. And guys, price reached that area, not one trigger line went through. That's a termination condition. That's odds favorable. Absolutely. Do you see how that works? If you're going to have the charts, use them, guys. Use them, use them, use them. They're there. There's a lot of information. Gary, termination condition, and it runs you over. That was easy. Termination condition. Who cares how pretty the entry is if the rules aren't met? NASDAQ certainly doesn't care. And it leveled you. And you said that there was no termination conditions on your large chart. So Gary, you have 13.2, but 13.2 has to be replaced with 34.3 if you're trading the NASDAQ. And guys, this is a good example, right? You're going to get away with it every now and then. You're not going to get away with it more often than not. Couldn't catch the trade on both charts. I don't know that I could either. What got you in all the way down here? Market flow. I mean, it's great. Everything is screaming, right? Everything says down. You're flying. I don't know where your entry is. 1310. 14310. 14310. So you might be trading directly into a termination condition there. So maybe you let it break. A good top into a termination condition. I love this one, right? There's a good top. It doesn't mean that the termination condition automatically is obligated to break. Great annotation. And we watched what the S&P did, right? That termination condition held like a champ. Sometimes, guys, your ability to make money isn't revolving around the trades that you win. A lot of times, your ability to make money is going to revolve around your ability to do absolutely nothing when there is nothing to do. Can't really stress that enough. So we're watching the S&P do everything the S&P says it's going to do, right? Guys, there's your bad top. It's one tick off, right? Pulls all the way back to the mid-band. There's your gap theory. It closes it, and then the market decides to go up. And that was to the tick. Probably didn't catch this one because of termination conditions. And guys, this is the one that's going to tempt you to change your plan, right? This is the one that when you go back and look at it, you're like, oh, it's perfect. And it went up $300 worth of profit. And I'm so upset that I'm going to start trading into termination conditions. So you trade into the termination condition here and it kicks your butt, right? And you trade into it up here and it kicks your butt. Because that one trade that didn't follow the rules works, you're willing to trade or to change your whole plan. Don't do that. Your plan has to be proven to win more than it loses, guys. All right, let's see what we have. Trade one, continuation long. Is continuation code for trend trade, Conrad? Okay, so we're coming from a bad bottom, and we're 50-50 on these one-to-ones with odds favorable momentum. I like it. It's a 50-50 trade from a bad bottom. You have divergence on a 50-50 trade, which we know takes away an advantage, right? A bad bottom takes away an advantage. You enter at the area, you get a reversal bar. That's your risk reducer right there. So I think the lesson in this one, Conrad, live to trade another day. I like it. Is that when this reversal bar prints in the direction of your trade, you were in at 97.75. Your stop after that pivot should have been right there. That keeps an awful lot of the powder dry. Yeah, once it starts to go in the direction of your trade, you have a fighting chance. Everything's happened that you needed to have happen. What the 13.2 shows me here, Conrad, and this is why I think getting that new setup is going to be advantageous. This is just the gap theory. Price reaches these one-to-ones. The large triggers are a full bar away. It's likely to smack back into those large triggers. That's my first profit point, especially with everything down and against me. And that's down hard. That's down strong on a 50-50 trade that's coming from a bad bottom. Does that make sense? I don't disagree with the trade. I think that the management, that next step in the process, could have been a little bit better. Respecting those right here. This is your large chart, right? So this isn't a termination condition that creates the full reversal. Therefore, it's a bad bottom. It's not a strong bottom. 50-50 trades have a higher success rate coming from a termination that creates a full reversal. For example, 3 divergences in the same location. All my trigger lines are below that area of support. This is a strong top. There's a 50-50 trade that works like a champ, coming from that strong top up to the bad bottom. 50-50 trade fails. Market's likely to continue down from that point. It's a great picture. Anything can happen triggers, right? So guys, anything can happen triggers. There is no momentum. We're losing it. That's one advantage gone, but we do have a clear path. But I don't have any areas inside of favorable large triggers. What can a loss of momentum create, guys? It can create a deeper push. We'll come back and see if it does. Loss of momentum. Guys, you can't have a 50-50 trade with a loss of momentum. That's too many things going away. Gary, 50-50 trade, no momentum, multiple divergences. You take the entry, and it works out. Take the entry, not from an area. Which is your entry chart, Gary? Is it the 8-2 or is it the 13-2? Are you trading a 13-2 and an 8-2, or are you trading a 34 and a 13? So you're trading a 34 and an 8-2? Is that right? I'm just trying to understand your plan a little bit. So what's this chart giving you? Other than 3 divergences in the same location with weak triggers and no areas inside of favorable large triggers, what are you getting from the 13-2? Have you defined that? It's just there so that you have more to look at. Guys, if you don't know what a chart's doing for you, why bother with it? Right? If you're not getting anything helpful from it, why are you looking at it? Isn't that cleaner, Gary? Because there you have a clear path, right? Looks like that pullback's coming from somewhere up here with all the triggers through in a strong trending market, and it pulls right back to a mid-band inside of favorable large triggers. Gary, I can get along with this trade all day long. That's rock star, isn't it? That's everything you want. That's a clear path, strong trending market, area inside of favorable large triggers. Did I need a 13-2? Because, man, this spoils the broth. Everything is perfect until you add the 13-2. I say it a lot, guys. Embrace simplicity. If you're not where you want to be, embrace simplicity. I'll never tell you how to trade, guys. I'll never tell you what trades to take. I'll never tell you when to enter. I'll never tell you when to get out. But what I will tell you is that it can be done simple. Old military thing. Too much information breeds confusion. Amen. Guys, you're all brilliant. Every one of you is brilliant. Every one of you is a gold star A student, right? Every one of you are so smart. And sometimes you're so smart that if 1 is good, 3 is better, right? Because I'm so damn smart, I can handle it. I can read it. I can discern the information. How many times have we looked at charts today that didn't get used? Ask yourself that. How many times do I ignore a chart so that I can take an entry on a different chart? How many times do I ignore a termination condition on the 13-2 because my 21 said that it's okay? How many times did I get in at the wrong spot because market flow said that I should, right? Guys, ask yourself these questions. How many times am I willing to break rules because I'm going to give myself an avenue to break that rule? It happens. You run out of luck eventually, right? That's it. Keep the stars. Wait for the best of the best. It makes life easy. It really does. Look at that, guys. Weak triggers, and holy smokes, it pushes lower. Who justified the ES long and got run over? Anybody? It's okay. It didn't cost me a penny if you did, guys, but there's a great lesson there. That when you have weak triggers, when you're at an area and it hasn't broken and divergence prints, you're probably going to get run over. The odds are likely. 60% of the time, you're going to lose every time, right? Whatever you have to say. I feel preachy today, guys. I don't mean to feel preachy. Never in the history of this spreadsheet have I had someone follow it and do worse than 70%, guys. Never. Never. If somebody told you, hey, every time you walk up to that guy, he's going to punch you in the mouth. Eventually, you stop walking up to him, right? You're like, I hate getting punched in the mouth, guys. This is how you avoid a punch in the mouth. Follow the rules. You might get a kick in the shin every now and then because it's a cost in doing business. Keep it easy, keep it simple. Be on the right side of things. Let your charts agree. This picture says either rules met or not. What does that mean? Termination, no longs fit. Doesn't matter what this chart says, doesn't matter what this chart says. Either the rules are met or they're not. Do you have rules? Guys, who has rules written down for how they'll take a trade? Who has a plan written out that says if this happens, I'll take this trade? Ron, you do? That's weird because all you ever post is winners with the occasional hickey. This is the easy part, guys. So Conrad, I have to ask you, how are you using an area inside of favorable large triggers if you don't have areas inside of favorable large triggers? How do you pull that off, right? On the large chart, does it say that on your checklist? So you're looking for the pullback. So even here, you don't have an area inside of favorable large triggers, right? You only have large triggers. You have a red midband above it. Is that where you entered? So why are you even using a smaller chart if you're taking everything from the large chart, right? Guys, these are what I do. And when I do this, I'm not telling Conrad that he's wrong. What I'm saying is that the plan that you say that you're trading says to use two charts, right? It says to use a large chart for momentum. It says use a large chart for direction. It says use a large chart for the areas that you're going to respect. But it says use a small chart to whittle down all those advantages to look for an entry. So if you're using my plan, it's impossible. Does that make sense? So Conrad, you've got to write a plan that suits your needs. And maybe that is use an area inside of favorable large triggers on the large chart as well, which becomes tough because then you need a larger chart to define whether or not that area is likely to hold. And then maybe you say, line up that price range on my 13.2 and use it here if it lines up with an area so that I can reduce risk and maximize profit potential. Guys, having a plan is great. Using a checklist doesn't mean a thing. If you don't have momentum and you check that you do, you've nullified that checklist's ability to help you. If the termination conditions are present and you say they're not, guys, this checklist means nothing, right? So if you're writing a plan, if you're using a checklist, guys, you got to be consistent with it, right? Those rules have to be met. And if they're not, you're breaking your rules. So right here, odds favorable, everything says, but Conrad, do you see? What's your area on your large chart? Because you told me that you find an entry at an area on the large chart, right? So this contradicts it right in the moment. But here you use the area on the 13.2. Does that make sense? Do you see how your brain will mess with you? You'll say, but Mark, I use the area over here. Look, there's my midband right at the large triggers. And look, here's the same trade. And then that butthead Mark says, nope, that's a completely different look, isn't it? This is a clear path. So Conrad, let's talk about why this is different. This is a termination condition that creates a full reversal. This is a strong bottom, right? Beautiful. This is a clear path with odds favorable momentum. This is the first two parts on the checklist met 100%. Do you agree? If we look at your plan, you had it, you had it, you had it, but because of your chart configuration, you have to change the verbiage, right? You have to say, I'm looking for Fibonacci support. I'm looking for a midband. I'm looking for something on my 13.2 that's likely to hold because of my trigger configuration. And this is where I'll take my entry. But how do you determine if it's this fib, or if it's the midband, or if it's these one-to-ones? That's what favorable large triggers does for you on your small chart, guys. Does that make sense, Conrad? And man, I sure hope you don't feel like you're taking a beating here, because it's not my intention. But those large triggers help you to find that best of the best area, right? And if we go back and we look at Gary's chart, oh, I hope I still have it up. I know where it's at. And we look at Gary's chart. Do you see how he lets the 13.4 lead the way? He has the clear path. He has the strong trending. And look how he's using an 8.2 for entry. He's using those areas inside of favorable large triggers. So in the large chart, small chart realm of things, he's making it easier to reduce his risk, to really pinpoint where it's likely to continue by using the 2. John created a workspace that gives you that look on a 13.2, the same look that Gary uses on the 8.2, and it creates a really awesome setup, right? And that really awesome setup is going to allow you to reduce risk. It's going to allow you to maximize your profit potential. And I have it, and I tend to stray away from NASDAQ just because it's psychotic. But so I think it's a great lesson, right? I think it's a good. The failure wasn't that there was no termination. On that picture that you shared, Conrad. So let's annotate it basic, okay? Let's annotate it super, super simple. I love words. I really do. But let's annotate it super simple. I had a strong bottom. So the first condition is met, right? I had odds favorable momentum. So rule number 1 is met. Price hadn't reached an area, right? There's absolutely nothing in the way. So I have no terms. Rule number 2 is met. You with me so far? Do you see how easy this is? If I circle the tail, where does it end up? So what we're looking for on yours, Conrad, for your plan, how do you define the entry area? That would be what I would want to see from you, is how are you defining your entry area? Why not use Fibonacci, right? Some people do that. I like a mid-band, but is the mid-band more likely to hold than one-to-ones? So that definition of an entry area is going to create another advantage for you. It's going to create, yeah, I can't answer it. Especially with this much momentum, I'd be more inclined to believe that support's going to hold. So if you go to that setup that John gave, this is NASDAQ, right? Look at those split triggers. You don't have odds favorable, or you don't have favorable large triggers, and it creates a problem. As you're coming through on that strong trending market, there's a couple instances where it pulls back inside of favorable large triggers. Just visually, it creates some opportunities, right? Look at all that odds favorable, mid-band and triggers. But this is one of the problems with NASDAQ, guys. NASDAQ likes to overrun a lot. So the more you can create an area, if you use the mid-band here, you got run over. If you use the mid-band here, it worked. Mid-band here, you're run over. Mid-band here, you're run over. Mid-band here, you're run over. So we're looking for consistency. We're looking for something that is identifiable, that's repeatable, that can be tested. And that's what this setup will do for you, Conrad. It's just going to give you one more advantage. And I do love advantages. I don't know if I've ever said that in this classroom. Guys, I want the best chance of winning. Every time I enter a trade, I want to know that this is something that I can go back, that I can test, that I can figure out, right? Guys, weak triggers, right at Fibonacci resistance. Any entries where? Show me your picture. And then John showing a picture of what we just talked about. Divergence on both at the fibs, weak triggers on the 13.2, incorporating that range chart into the mix. Right here on crude oil, I don't have anything, do I? So Conrad, let's go through once again. Let's just write rules on it, right? This is my trigger look. Is it odds favorable momentum? Yeah, dude, this is what we do. I love it when the questions come flowing like this. I hope I don't ever seem put out, because I'm never put out when you guys do this. Conrad, is this look the strongest look? Both triggers wide, angled in the direction of the trend, small below, red. Is that what's happening in crude right now? Or are they flat and lifeless, right? See how they remained a full bar away and price closes the gap? So it's not your best trigger look. Not so much, right? But yeah, not for a long trade. I hope you're talking short, because the background's red, which means we're only looking for short trades, right? Cool. We do have a clear path, without a doubt. There's nothing in the way. I don't have areas inside of favorable large triggers. If you traded the mid-band, you lost. If you traded the one-to-ones, you lost. If you traded the pivot stop out, well, then maybe you had a chance. But do you see how just, yeah, that little bit, guys, either my rules are met or they're not. If I can check everything off on this list, I'm taking the trade. I don't care what anyone says. I don't care if someone says, but Mark, I heard the old guy on the corner say that crude oil was going to go up. I don't care what the old guy says. What I care about is being able to visually recognize the advantage of momentum, of a clear path, and of an area inside of favorable large triggers. And if I stick to this plan, especially when it comes from a good top or bottom. It's a trade that typically wins 70 to 80% of the time. Guys, if you're not in this to make money, like you just dig video games, keep it on simulator, have fun. But if you're like the rest of the world and you want to make money, wait for those advantages. And look at this. Everybody thought we were going short, right? Everybody thought the market was going down. Everyone thought, oh my gosh, I better get in, I better get in, I better get in. Is this a strong top? What do you think, guys? We've gone through the lesson. Did price reach resistance and absolutely no trigger lines break? Is it a strong top? What do you think, guys? Give me an answer. It'll let me know whether or not we need to talk about strong tops and bottoms some more, because they're important, aren't they? It's not a strong top. Absolutely, Gary. Absolutely. John, Joel. So, guys, now we've reached resistance, and none of the trigger lines have broken through, right? Or now we've reached divergence high, none of the trigger lines broken through. Guys, is this a strong top? Joel says yes. Is it a strong top, Safia? John in Alaska? John says yes, right? Joel says yes. Gary says yes. Guys, I hate to do this to you. A strong top or bottom is a termination condition that creates a full reversal. Embrace the language, guys. I've made it as simple as I know how. Has the market given us a full reversal? Has the large triggers gone from green to red? Are the small triggers angled down? No. This has the potential, but right now it's just a termination condition. Just a termination condition. I'm not looking for a long trade. Does that make sense? Give me a Y if that makes sense, guys. Embrace that language. Write it down real quick, because if you write it down, you're going to remember it. Guys, not a strong top, and look what happens. The market continues up. Now it's a termination condition, but we don't have a full reversal. My large triggers are above this fib. My small triggers are angled up. My large triggers are up. My synthetics are above the area, but my small triggers are down. These are split. Triggers don't match. Guys, this is the infamous go make a sandwich pattern. Wait for everything to agree. I think that was a great lesson, wasn't it? Not a termination that creates a full reversal, therefore not a strong top. Just a termination condition if it creates a full reversal. Absolutely. This is like the little engine that could. It has the potential to be a strong top. But I've got a lot of green on a red background, and I've got indecision, guys. I'm going to let the market figure out what the market wants to do, and then I'm going to wait for every chart to agree, and then I'm going to pull the trigger. Don't make trading harder than it has to be. Pretty cool. Guys, I'm going to take 5 minutes. I'm going to leave you with crude oil here. We'll see what happens. I don't know. I don't have a magic 8-ball. I can't tell you what's going to happen. When I come back for this last hour, guys, I want you to lead the way, right? Do you want to talk about strong tops and bottoms? Do you want to talk about all charts agreeing? Do you want to talk about divergence? Tell me what you want to talk about. When I come back, we're going to have your conversations and get you where you need to be. I'll be back in a few. You know, it's funny. I walked back into my office and I saw this, and I was asking myself, who used patterns to look for a long right here? Safia, do you remember when we talked about that continuation look? And I'm going to share a little bit about my path real quick. Guys, when I started learning the software, I was in the exact same place you were. I was brand new. I was trying to see everything. I couldn't see what I thought I was going to see. And there were times, and I'm going to take this picture, and I know that my brother's listening, and John, you're not smart, and I don't like you, just so that he doesn't think. But this would happen right here. This bad top, guys, the same thing that we've been talking about every day. This bad top happens, and I'd see this look. I'd see those strong triggers, right? Those smalls below, and it looks like the large is going down. And guys, I would go short somewhere in here, and I'd probably try a short again somewhere in here. And about that time, John Novak would say, hey guys, notice that your triggers are staying above. Notice that it didn't come from a termination condition. Guys, this market is likely to pull one of these moves and go up to that next key Fibonacci area because it's from a bad top. I'm in a short, and John Novak saying that the market's going long, right? And I'm like, he's got a crystal ball. He just put the juju on me and I can't do it. And then up here I go, oh, look, it's a termination condition. And I try to form an opinion and I try to go short again somewhere in here. And I get run over. And John Novak once again is like, man, I'm looking for that long. There it is. And I just took it up to Fibonacci. Bingo. Guys, as you learn the patterns, you're going to start to see these things, right? It used to aggravate me to no end that John's like, all right, we're not looking for shorts because of this bad top. We're not looking for longs because of this weak bottom. We're not going short or long yet because of that gap theory. And guys, it was a lot of words that hadn't been put into patterns yet. There was a lot of things that I didn't understand, right? So I had to go through that repetition, guys. Every time I saw something and every time he talked about something in the room. And guys, remember, I was in your shoes. I'm in the student role. I'm taking pictures. I'm misunderstanding lessons. I'm taking trades that I shouldn't be taking. I'm getting out of trades too soon. I'm exiting trades too early. All these different things. And guys, I started filling up this spreadsheet. Every time he posted something in the room, every time he annotated a chart, I stole it. Right? And John, I'm surprised you didn't go long here. But I would take it. And I would take that and I would put it into my spreadsheet. And I started building these chart reading things, right? One of them was split triggers. Until I believed in the advantage of having trigger lines trending one on top of the other. Guys, split triggers takes away the advantages. It creates a window that's really too big, creates unnecessary risk, right? Creates indifference or indecision. So I started stealing those pictures and putting them in here. Midband is a termination condition. Like that was a pattern that I needed to learn. When it reaches the midband and the large triggers are a full bar away, guys, look at this. This is somebody's chart with a long trade in the middle of that vacuum, right? Getting run over. That was my trade too. That was my long as well until I started really understanding these patterns, guys. So every time we talk about a bad top, every time we see the reaction of the market from that bad top, right? Every time we see that reaction from that bad bottom, guys, start building this database in your head. Start building this database in your spreadsheet so that you can start to recognize them, and you will as time goes on. And then, David, it looks like John just answered your question. I'm going to read it out loud. Earlier, I was talking about Gary's chart when you posted your question at 10:08. Here's the picture with the questions. All triggers broke through the fibs, but it wasn't a termination condition, right? There was a full reversal. How does it conflict? So I guess my question would be, how does it conflict, right? Triggers broke area. It's not a strong bottom. Did I call this a strong bottom? It can be a little overrun. And David B., if I reference this as a strong bottom, I apologize. I shouldn't have, right? Okay, because it's not. The area overruns, right? It breaks. Ultimately, we get to the other side of it. So we're still trading with direction, momentum, all those sort of things. We're just not going to call it a strong bottom. Everything doesn't have to be a strong bottom, right? So right here, David, had it reversed, strong bottom all day long. But we got that little push, we got that little overrun, and that happens because they're areas. But when it stops to the tick, there's something there. There's something magical about it. That's when it gets the it is. Do you want to know how to make it simple, David B? Every time the market reverses, it doesn't have to be a strong top or bottom. How's that? The only time you ever have to use that phrase is if it's a perfect termination condition that causes a reversal. It doesn't mean that the market won't change direction. It just means that it's not a strong top or bottom, right? And if it's not a strong top or bottom, the market has the potential to continue with the trend. If it's not a strong top or bottom, the market has the potential to continue with the trend. You know, weak bottom comes up. Ultimately, it comes back down a little bit. And that's all that we're saying. Weak top, the market has the potential to continue with the trend. It's never guaranteed. I'm looking to see the examples. And why do we recognize strong tops and bottoms? Like, what's the core? What's that foundation? Why does Mark talk about this? Mark talks about it because your best chance of success, your highest probability trade, right, comes from a termination condition that creates a full reversal. That's it. That's the only reason I talk about it so much. It gives you an edge. So as you get into those 50-50 trades, when is a 50-50 trade more likely to work? From a pivot from nowhere or from a strong top or bottom? From a strong top or bottom. So when you begin to recognize those and you add that medium probability trade, well, now you can have one more advantage in there, right? One more thing that says, hey, the odds of this trade working have just gone up. So now we have weaker triggers. They haven't broken through. Divergence over here. Do you see how it takes away the advantage, guys? And it may still go up. This market's cranking to the upside. We saw the same thing here, almost exactly. Patterns repeat themselves. So what you're going to do is you're going to keep it basic at first, guys, and you're going to see these trades and you're going to follow your checklist and you're going to be 100% committed to giving yourself the highest chance of success, guys. That's the path. And then your next step, as you read your indicators, as you begin to recognize things more and more, the next thing you're going to do is you're going to mess up every one of those rules. Because you're going to start to trade what you read rather than what your rules say. It's totally normal. Don't panic. And then you're going to find that balance, right? You're going to say to yourself, well, I have enough advantages in place. I have the smalls above the large, and the large are wide, and there isn't a termination condition, and there's a mid-band right inside. But my triggers are split, but there's no divergence. Maybe I'll take this trade and I'll manage it assertively because it's not the best look. But if I get in at 0865, I get a reversal bar. I have a way to manage this trade. I begin this process. If divergence prints on this 5-1, and I don't have the best look, maybe I'll get out of this trade. Maybe I'll reduce my risk, right? Maybe I'll take quick profits. But what does the 13.2 say? It says small's above the large. It says a clear path. There's a mid-band. Your stop keeps you safe, guys. You probably already took profits on the first contract. Maybe you're at break even at this point. Maybe if divergence prints, you take an exit. But do you see how the rules always lead the way? And then from the rules, your ability to read charts will create management scenarios. Can we use this to determine where this market is likely to go if this trend trade works? Fibonacci resistance at 42.15. Fibonacci resistance at 42.16. Guys, at this point, you're already up almost $200 in this trade. And absolutely nothing has changed. The only thing that's changed is now your small triggers are in favor of the trade too. See how that works? 13.2 leads the way, guys. 13.2 gives you the information you need to feel as though it's time to take a trade. Your 5.1 defines your entry point, defines your risk. And guys, if you were in at 08.50, 08.75, even 09, that was $200 worth of profit right there at 42.13, and the market hasn't even blinked. Like, these are your first down ticks. Could you already have money in the bank, $150 in the bank, break even, absolutely nothing to lose, every advantage on the 13.2? What do you think, guys? Debbie liked it. Debbie, beautiful trade. You know what always makes, like, this is my warm fuzzy. I got tingles. Guys, when everything that I just said about advantages, Debbie just posted a picture. She said, you know what, Mark? You're absolutely right. I have every advantage. Let's make some money. Why wouldn't you? If you didn't take this trade, guys, why did you talk yourself out of it? That's what I had to start asking myself. Because when John Novak is your brother and you talk yourself out of perfect trades, you hear it. You hear it loud. Ron says he finally got a trade today. His conditions were finally met. Everything says up. Everything is strong. In the momentum phase, he gets in. He gets out. Quick $220. Ron can buy a snow cone at the beach today. Get you a corn dog. Do they have corn dogs on the East Coast? I'm assuming that's pretty universal. You know those came from Texas? Texas State Fair, that's where the corn dog was invented. Great trade, Ron. Consistent. Every time Ron shows me a chart, he shows me the same thing. Every time he takes a trade, it's the same conditions. Strong triggers, clear path. Everything says up, nothing in the way, get in, get out, right? Oh, I love a chili dog. Don't get me started. Check it out, guys. It's still going. Either your rules are met or they're not, right? Either your rules are met or they're not. You're totally lost, Joel? About what? Guys, you can't tell me you're totally lost, but don't tell me why. That's like telling your spouse, I am so mad at you, and then walking out the door. Tell me why. Yep, crude's cranking up, isn't it? Weak triggers, divergence, and a strong trending market. Some people buy that mid-band until it stops working. Some people wait for the advantages to be there. Joel, what's your challenge right now? Let's get you situated. And Debbie's holding for her 6, right? Debbie, have you reduced risk behind the pivot? You'll stare at a bikini or two in my honor. Hey, I appreciate that. Great. My wife's going to come home. She goes, oh, Ron's looking at bikinis for you, huh? Have an awesome afternoon. Debbie, I'm still figuring out your management plan. That's why I asked. And guys, if I ever ask you about what you're doing, it's okay to not tell me, right? You too. And sometimes I'll say things that's leading the witness. Gary, every advantage, perfect entry, great profits, and then your stop was right at that mid-band when the 13.2 and the 21 say go. This is where I wait for the pivot. If I'm expecting, because of the 13.2, to make that next area, and there's nothing here, why? The small triggers even went in direction of the trade, didn't they? That's your second chance entry. Just pulling behind pivots, right? Small charts show fluctuations, don't they? Small charts will show you up and down, up and down, up and down, but what does the large chart say? Sometimes you got to be willing to lose. Oh, I got you. I hope I'm spelling this right. Do you guys know who Sun Tzu is? He wrote The Art of War. Great book. And I'm going to paraphrase because I don't have the quote in front of me. In order to win, you have to put yourself in the kill zone. In order to be successful in battle, you have to be willing to die. That's the gist of what he said. If you are afraid to put yourself in that position, you're not going to be successful in battle. Guys, trading is very much the same thing. Your stops are a calculated risk. Your stops are where the market shouldn't go, right? And in order to win, in order to get the best entry, don't you have to be willing to enter against those down bars? Guys, sometimes you have to stay in the fight when the advantages are present. And when you begin arbitrarily moving your stops because you get scared, that's when the market comes and stops you out. Guys, the market is a reflection of emotion, of fear and greed. And don't you think if you're scared to death here at 42.09, don't you think the big guys know it? Don't you think they're going to push it down and knock you out of your position, right? But if you say, I don't have any reason to change my plan yet, I'm gonna stay in the kill zone. Well, then you, like Debbie, are still in this trade looking for Fibonacci resistance. What's the one thing that might take you out of a trade, guys, on the 5-1? 3 divergences, right? 3 divergences on the 5-1 may terminate the trend. Another one of those things that used to aggravate me about my brother when he would teach a class, I would have jumped out early, and he goes, hey, what about these trigger lines suggest that it's not going to make it to the next area? Do you guys ever do that? What about the 13.2 says that you're not going to make it to the next area? Can anyone make a case for it? I can't. That's how great management plans are built, trusting the same chart that told you to look for an entry and helping it let you dictate. Look at that. Debbie, is that bingo? Right to Fibonacci resistance, every advantage, beautiful entry, calculated risk, absolutely nothing changed. And guys, it went right where it was supposed to go. Do you know what this is right here? That's fear. That's allowing a small chart to take you out of a large chart trade. That's letting a couple ticks on a small chart convince you that all the reasons you got in are just a moot point. that they have absolutely no value, that these strong triggers and a clear path, you don't trust them, right? Because that small chart got scary as all get out. Does that make sense, guys? I had to learn this lesson. You guys remember the other day we talked about asking yourself, what changed? From the point of entry, guys, what changed? Right here as it pulled back, what's the only change? The small triggers turned in favor of the trade. So at this point, every chart agrees. If you miss this entry, that was your second chance. That was the market coming back for you. You added on, John? Beautiful. Why? Because every chart agrees with odds favorable momentum and no termination conditions. Thank goodness for this divergence, right? It got you back to your second chance. And then after that, guys, what changed? Here's a little fluctuation. What changed? Nothing. Your triggers got stronger. Everything's still set up. No reason to ever exit this trade. Guys, that takes trust to manage a trade like that. Trust comes through repetition. John, beautiful trading. Debbie, beautiful trading. Great chart reading. And this is it, guys. This is finding that continuation. It's relevant because when everything says up on the 13.2 and all the triggers on the 5.1 are going the same way, don't get out of that trade. I love that picture. Good picture. Steal it, guys. Put it in your spreadsheet. Make sure you understand why. But ask yourself, what changed? I'm in this trade. I had every advantage on the 13.2. I'm in it on the 5.1, but I want to move my stop. What changed? It's going to help you. Look at the fear on the 5.1. The large chart's pushing up. The small chart, 3 divergences in the same location. Guys, it may grind up to the next area. When the advantages aren't clear, it becomes more difficult because you're forced to make decisions, right? You're forced to make decisions and opinions. If you simply wait for the rules to be met, it makes life so much easier. I'm going to give you an example of a trading plan once again, guys. I like to share things in the room. I'm going to let you share this one. This one uses the older management plan and it doesn't reflect the plan in the new materials, but it's still valid for new users. This is your path to success, guys. I'm going to share this PDF with you. Read it a couple times. To minimize your learning curve, post pictures of trades in the class every day. Every trade, win, lose, or draw. If you win and the rules are wrong, you may have a short-term victory, right? If you trade into termination conditions and you win, it's a short-term victory. The odds are favorable, you're going to lose more than you win in that same situation, right? So don't practice. Don't set yourself up for long-term failure. How are you going to know the difference? Well, to be sure, you need feedback from us, guys. We're here to help. John Novak throws little tidbits in here. Guys, he wrote the software over 25 years ago. He's been training day traders for the last 2 decades. And he jumps into this room and offers his feedback. He gives you his pictures. He shares his knowledge. Everything that I know because of him. Because I took the same class that you guys take, guys. I talk to him daily about what we see and how to make your life easier. Get that feedback. If you place a trade on the simulator, if you participate in class, guys, there is no risk of loss or capital. You need someone to tell you what you did right or wrong when you're new. And guys, if you are thin-skinned and get your feelings hurt, you got to work through that. Because I'm going to tell you what you did wrong as much as I tell you what you did right. But my goal is for you to be successful. So it comes from a place of love, guys. This is part of the educational magic that Nexgen offers new traders. This is why Nexgen's education is better than any education I've seen out there. Not because I teach it, But because of the time and effort John Novak puts into creating this program to teach you how to backtest, to teach you how to go through and verify and validate, to give you such a solid plan to put you on the path of success, guys. Embrace this outline for education. Post pictures, use a spreadsheet, learn the trigger lines, guys. Do it. Do it, embrace it. Every time you enter a trade, use that checklist, right? Make sure that your rules are met. Keep it mechanical. Keep it methodical. Annotate your charts for the most effective feedback. The more information you give me, the more information I can give you and get you where you told me that you want to be. Guys, create your database. Joel, we've all tried it the hard way. Create your database of what it looks like when your rules are met. Right? That's that spreadsheet, guys. Make sure you're using it. And spend 20 days focused on entries. 20 days of recognizing advantages. 20 days of the absolute best of the best. And then define your management plan. Take those great entries and learn how to manage them. And practice a 30 to 90 day, right? 30 to 90 days of keeping it mechanical, methodical. Keep your opinions out of the mix. Keep your emotions out of the mix, guys. Either it is or it isn't. It does or it doesn't, right? There is no maybe at strong triggers. It's always either it is or it is not initially. Until you learn to read your charts better, you can adjust your targets based on experience later, guys. You can adjust your entries based on experience later. And then when you're there, when you're good, when you're taking the right trades, guys, that's when you go to that Apex Trader funding. That's where you trade someone else's money and you trade your plan. John has taken a strong trending market, right? And he's taken the entry at the midband in a strong trending market, and 3 divergences in the same location may terminate the trend, but it's not guaranteed, is it? But John says, I've lost the advantage of a market that may continue, and no matter what happens next, I'm going to exit that trade. I'm going to preserve my capital. And then when all the triggers roll, there it is again, guys. And now everything agrees once again. He's going to look to finish the move. How did that turn out? Oh my gosh. There it goes. Chart reading. Waiting for the trouble to pass, guys. Being on the right side. I bet he's about to show this picture. I'm going to beat him to it. You're on the correct side of everything. The market goes wonky, and once it agrees again, finish that move if nothing's changed on the 13-2. Be on the right side. Let all charts agree. Gosh, John Novak putting on a clinic today. Let it be right. Let them agree. If everything is green and you go long, your chances of success go up, right? If every trigger is up, the market's likely to go up. If everything says go. John, what a great trade. Nice job. I might get you a birthday present this year. Pretty cool, isn't it? Patience until everything agrees, and then take advantage, guys. And look, there's some Fibonacci resistance. And John says, I just needed to get close. John, you just won. Congratulations. Straight to Fibonacci resistance. And now those deep pockets investors are going to have to make a decision about this area. Watch how price reacts to it. Great trade, John. Watch how price reacts to it. Even if it's 1 bar on the 5-1, do you see how it instantly changed direction right at Fibonacci? Guys, you knew that Fibonacci was there. When did that come to be? You've been staring at it for the last 45 minutes, guys. You knew where the market was likely to go, and it went. John Novak took advantage of it. Got about 10 minutes, guys. What do you want to talk about? Did I miss a chart? Did I miss the question? Did I pull this one up? So that's 4 contracts from 46 to 68. That's 24. What's 24 times 4? 48.96. Guys, that's $1,000 trading with the indicators. Everything agrees. My brother used to always say, should be obvious, should be obvious. And it used to tick me off, I'm not going to lie. Because it wasn't obvious to me yet. I hadn't done the study, right? I hadn't taken the time, I hadn't participated in class, I hadn't filled out the spreadsheets. I hadn't asked my questions, it wasn't obvious yet. Weak triggers at fibs, no more longs. Divergence says, yep, we agree. That's okay, John. Thank you so much for the participation and coming in here. Guys, how many pictures did he take on those trades? I've got 6 in class. 6 pictures in class. Debbie, golly. Guys, I'm going to copy Debbie's picture address. I want to do what Debbie does. And guys, this is the part that's going to blow your mind, okay? So in at 875, out at 1175. That's 3 points. That's $150 on the first contract, right? 0875 to 1650 is, we'll call it 8 points, $375 on the second. And guys, I'm not a math guy, but that's about right, right? So there's 475, 525. So guys, that's 525 in one trade. Super patience, right? That's her daily goal. If she's looking for 250 a contract, that's her daily goal. Guys, that's $2,100 a week off one trade. Oh, and there you go, Rain. He will. That's $8,400 a month, guys. That's $100,000 a year. Based off waiting for every indicator to agree and then to trust your 13.2 enough to get you to that next area. That is outstanding, Debbie. What if you did this 3 times a day? I don't know how many of you make $1,500 a day here. I don't know a lot of people that do. I mean, they're out there, right? It's a $7,500 a week. That's a $30,000 month, guys. That's a pretty good month. Just take the 1. And Debbie, what happens when you're doing this on a 10 lot? You got out with divergence, Paul. What changed with 1 divergence on a high probability trend trade? It's okay. We talked about it a little bit. Your 13.2 had a clear path and odds favorable, right? So Paul, does 1 divergence, and this is, guys, this is the what happened. Does 1 divergence keep you from taking a high probability trend trade? This is how I learned to manage. If I'm looking for a high probability trend trade, I have momentum and a clear path, I have an area inside of favorable large triggers, would I let 1 divergence keep me out of that trade from a small chart? Well, then you would be taken out, wouldn't you? What if it didn't, Paul? What if it ran straight to the fib like the 13.2 said, and the only thing you had was that sick feeling in your stomach that you probably shouldn't have gotten out because all charts agreed and it was a high probability trend trade? And that's the point that I'm trying to make, guys. Divergences on the 5-1, use them in that 50-50 scenario when it's lower, right? And that's exactly it. What does one divergence typically do? Man, it gets you right to the perfect entry. And that's what it did here. You took the best of the best entry. So Paul, ask yourself what changed. If every chart is strong, if every trigger's up, if every background's green, if there's absolutely nothing in the way, why on earth would one divergence scare you out of a trade? Initially, it's because you're not trusting the 13.2. That's the easy answer, is you haven't built the trust in the 13.2 yet to believe that when it's strong with a clear path, it's most likely to get to that next fib. It's very natural, it's normal. You'll let a small chart take you out of a perfect trade, even though it's only one divergence. Guys, it happens all the time. I've seen it all the time. I've done it a million times. As I was the king of taking 20 trades in a day and being up 22 ticks at the end of the day. Even on positive equity days, I was down money because of commissions, guys. It's normal because I let the 5-1 take me out of 13.2 conditions. Safia, you too. Thank you for being here. And that S&P is just on a grind, isn't it? It's going for that 21.3 area. So Paul, great entry, man. But guys, ask yourself, go back. Who does this? I'm going to give you guys something to do this afternoon, and let me know if you do it. And I'm going to find somebody. Let's just do this. This is a high probability trend trade long. Or odds favorable, right? Odds favorable, no termination conditions, pull back to the area inside of favorable large triggers. Letting the 13.2 lead the way, right? Letting the 13.2 take you to that next area. Letting the 13.2 get you up there. The pullback here that may have gotten you into a trade has the exact same conditions as the pullback here, right? Guys, let it. Every great entry has a management story. So, Paul, your job is to go back and annotate that chart. No termination, strong trending, area inside, and then you get out at resistance. You're missing areas, Joel, it looks like. Because this 5-1 fib should be transposed over here, which means that you're right into it with the weak triggers. Great entry, great exit. But getting those trigger lines off of those other time frames onto the 13.2 is going to create advantages for you. See how on John's chart, the Fibonacci plays across? Those are on the 13.2 chart for a reason. And guys, one of the reasons that it's on that 13.2 chart is because we're using the 13.2 chart for areas. We're using the 13.2 chart. So on your 13.2, guys, when your workspaces are built, supplied by Nexgen, there's areas from 3 time frames. There's the 13.2 time frame fibs, and those extend all the way through the gray to the end of the chart. Those never stop until they're not relevant anymore. You're going to have skinny fibs, and those are your 5-1 chart fibs, but they are transposed onto your 13.2 because we're respecting them. And then you have the 21.3, the fat ones. And guys, again, those are transposed because we're respecting them, right? We're using the 13.2 for termination conditions. So if you're not running synthetics on your 13.2, you're not giving yourself the full picture. That's it. You got to wait for them to roll, right, Paul? Either rules met or rules not met. Those can be your only options. S&P has a whole lot of nothing going on, guys. Crude oil, it's either going to roll or it's not. Right now, it's just a termination condition. So we're not going long into it. But everything says up, so we're not trying to be the first person short. You're sitting on your hands and you're just waiting. Waiting for advantages. Guys, how'd we do today? Did you learn? I love it when I learn. I learned today. I learn every day. I'm going to give you a little Mark Douglas wisdom. Thank you, Debbie. Great trading. I'm going to give you a little Mark Douglas wisdom, guys. When you stop expecting to win every trade, you're going to start winning more trades, right? Stop caring about the results. Start worrying about the execution. Guys, keep your method simple. Keep your method easy to execute. And if you don't, like Conrad said, if your checklist doesn't match up with your trade, something's got to change, right? Maybe you need to adjust your checklist. Maybe you need to make sure that your trading is really creating advantages. Gary, it's not even that you have to demand good tops or bottoms. It just creates a little more of an advantage, right? If I have odds favorable, no terminations, and an area for entry inside of favorable large triggers, 100%, I don't care if it's coming from a good top or bottom. It's a great trade. But if it is coming from a top or bottom, it increases the likelihood of success. Momentum is on small chart pivot. I don't know what that means, Conrad. I don't think I've ever used that phrase in the classroom. Momentum, check this out. If I go to the education page and I go to the trigger lines and I say, hey, Nexgen page, how do we define momentum? We define momentum with trigger lines, and nowhere does it say pivots. Nowhere does it say what chart. All it says is that when the small triggers are crossed up and above the large triggers that are also crossed up, I have odds favorable momentum. Conrad, do you see how you created a new absolute that doesn't correspond with the educational material? Had this one guy, he likes to talk about bearish and bullish, bearish and bullish. You know who you are. Has nothing to do with the rules, guys. Up or down is unimportant. Bulls and bears are unimportant. What's important is having a methodology that's easy to understand, that's easy to follow, having a set of rules that have been proven to win more than they lose, and then simply focusing on the execution. Right? Don't create rules where rules aren't there. Don't add charts that you're not willing to learn to master. That you're not willing to pay attention to. Make sure that you keep it simple, guys. And on that note, I'm going to call it a day. I hope you had a great day. I hope that your trading went well. I hope that you learned a few things about management. I hope you learned a few things about advantages, guys. I hope today inspired you to keep it simple. I hope today inspired you to not overthink this stuff, guys. It doesn't have to be hard. It doesn't have to be difficult. Momentum is on small chart black candle bar. I still don't know what that means, Conrad. I'm sorry. You want to see momentum on a small chart? Let's do this real quick. And then I'm going to leave. But let's do this first. You ready? That's momentum, isn't it? Small's outside of the large. Can you tell if this is a 5-1 or a 13-2? Without looking up here, if I cover this? That's momentum, right? That's momentum. That's not, and look what happens. That's momentum, and it keeps going up. That's momentum, and it keeps going up. That's momentum. Guys, don't overthink it. It has nothing to do with candles. It has nothing to do with price bars. It has nothing to do with areas. The only thing momentum has anything to do with is whether or not those small triggers are outside of the large triggers. How's that for simplicity? It doesn't have any bearing on what color the Fibonacci areas are. It doesn't matter if there's a 1-to-1. Guys, it doesn't matter if it's Tesla or Bitcoin. It doesn't matter if it's the S&P. I can identify momentum on a small chart with a simple comparison of the small and the large and whether or not there's space in between the two. You guys are all too smart, and you're trying to make the easy stuff more difficult. Don't do it. Let the easy be easy, guys. Life's hard enough on its own. Don't make your trading difficult too. That's it for me today. Thank you for being here. I will be back tomorrow morning, 9 a.m. We're going to do it again, and we're going to do it every day until you guys are comfortable. Every day until you guys are confident. Every day until you guys embrace the idea of simplicity and taking a trade that typically wins more than it loses. Have an awesome afternoon, guys. I'll see you in the morning. Be good, everybody.